Can you see my screen? Please, can you see my screen?
Yes,
Can you see
sir.
the question on the whiteboard? Can you
Yes,
see the question on the whiteboard?
yes, we can.
Yeah.
Okay, so let's begin. May 2016 question 1.
Zelo Limited.
Okay, so the trial balance below relates to Zelo Limited as at 31st December 2015.
Okay.
Then you move to the footnote, the requirement. The requirement say A, prepare a statement of profit or loss for Zelo Limited for the year ended 31st December 2015. And then B, prepare a statement of financial position for Zelo Limited as at 31st December 2015. Now, this is a trick. The A part, they are asking you to prepare a statement of profit or loss. But per the standard IAS 1, the name of the statement should be is a statement of profit or loss and other comprehensive income. Is that clear?
Yes, sir.
So open your first page. Then start. Put down the title of the question, Zelo Limited. Write the title of the question in capital letters, like this, Zelo Limited. I don't know why my pen seems to be misbehaving this time. So we have Zelo Oh, that's my pen misbehaving. I don't know why my pen seems to be misbehaving these days. I think I need to change the pen. So let me see this. So Zelo Limited statement of profit or loss and other comprehensive income for the year ended 31st December 2015. Then you underline it boldly, and then since the statement is in thousands of Ghana cedis, put your thousands of Ghana cedis here. Only one column. Only one column. Then leave the first page. Leave the first page for your statement of profit or loss. The first page. Leave it for your statement of profit or loss. Then go to the next page. Then go to the next page. Then go to the next page. And then you also start. Go to the next page. Then you also start a title, Zelo Limited. Zelo Limited. Then you put on a statement of changes in equity. Statement of changes in equity. for the year ended 31st December 2015. So the statement of changes in equity should also take one page like this. Your statement of changes in equity should also take one page this way. Then you go to the next page. When you go to the next page, then you also start. Go to the next page, then you also start another sheet and call it Zero Limited. Zero Limited. Zero Limited. Statement of financial position. Statement of financial position. As at 31st December 2015. Then you underline that one too. So put down your three statements. The statement of financial position, that one should take 2 pages. Your statement of financial position should take 2 pages. 2 pages. So after the 2 pages, then you begin your working. After the 2 pages, then you begin your workings. So the next page after the 2 pages, I can begin my workings here. I can begin my workings here and call it workings. I put all figures in thousands of Ghana cedis so that I don't waste my time. So let's begin our workings. So let's begin. So now you leave the statement down, then you begin your workings. So in the workings, you read the footnotes and work all the footnotes. Now, every financial statement starts from the footnotes. Is that clear?
Yes, sir.
Always start from the footnote. By the time we solve 4 examples of it, you'll be perfect. This is an aspect where students lose a lot of marks. It should rather be a game changer for you. There's nothing there. So, footnote 1, we're told that inventory count as at 31st December 2015 listed goods with a cost of 10.5 million. This includes some damaged goods that had cost 800,000. This will require remedial works costing 450,000 before they could actually be sold for an estimated 950,000. So there are some damaged goods in there. Value the damaged goods separately. So the damaged goods, the question is telling you that the damaged goods cost 10.5 million. So cost of damage 800,000. So cost of damaged goods is 800.
This meeting is being recorded.
Now the standard says we should value inventory at the lower of cost and net realizable value. So net realizable value, NRV, is the net of the selling price. So we can sell it for 950 minus the cost to sell. They say we will incur remedial cost of 450. So the 450 is the cost to sell, giving you what? 500. Are we getting it? So since the cost and the NRV is 500, it means the inventory value has fallen. So this is an impairment of inventory. Impairment of inventory is what we call the inventory write-down. Is that clear? Is that clear?
Yes,
An
sir.
impairment of inventory called an inventory write-down. Inventory also impairs. An impairment of inventory, we call it an inventory write-down. So the write-down is a cost. You charge that cost to cost of sales. You charge it to cost of sales. So you immediately go to working 2, and then now calculate the value of your inventory itself, your closing inventory itself. Now, the closing inventory, the cost, the question, they said the inventory count listed goods with a cost of 10.5. So the inventory, the closing inventory itself, the value is what? 10.5. That is 10,500.
Yes, sir.
Now, from working 1, we are supposed to write it down by 300. So you write it down. Now they write down in working 1. Because of the damaged goods, we are supposed to write it down by 300. So when we write it down by 300, our final inventory value becomes 10,200. Are you getting the point? Are we getting it?
Yes, sir.
Yes, sir.
You will value the damaged goods between cost and net realizable value. And you realize that there is a write down of what 300, meaning that the damaged good will. So to value the total inventory, you go and take the cost of 300 from the original inventory. Once you have done that, the write down you say you are charging to cost of sales, go and charge it to cost of sales so that you don't forget. Immediately go to cost of sales. So now working 3, you can open your cost of sales account. Now check the trial balance, whether they give us cost of sales as a whole or they give us opening inventory, purchases and closing inventory.
You give
Check.
it
Did they give us cost of sales as a bulk figure? Or
Yes,
they give
sir.
us inventory
Yes.
separately,
Yes, sir.
purchases separately?
Uh,
What did they do?
as a bulk figure, cost of sales.
They give us cost of sales as a bulk figure. So you take the bulk figure as your opening balance. So this is cost of sales opening balance. What is the figure?
143,800.
143,800. So the balance goes forward 143,800. Then you've seen an inventory write down, which is a cost. So add it to it. Inventory write down. It is a cost. So add it to your cost of sales. Inventory write down for 300,
Yes.
But leave ample space for the cost of sales, because as you saw, some expenses can also be charged to cost of sales. A typical one is depreciation. Is that clear?
Yes, sir.
Good. So let me calm down a bit and then, yes, quickly do your first workings. Quickly write working 1, 2, and 3. Do that quickly. Do that quickly and let's move. Do that quickly. Put down working 1, working 2, working 3. Write that quickly. Write that quickly and let's move. Are you done? Are you done?
Yes, sir.
Yes, sir.
So you leave ample space for the cost of sales. Then you move on. Note 2. Look at note 2. It says the following non-current assets. Plant. All plant, including joint operation in note 5, is depreciated at 12.5% per annum on reducing balance. Land and building. The land and building were revalued at 15 million and 48 million respectively on 1st January 2015, creating a 21 million revaluation surplus. At this date, the building had a remaining useful life of 15 years. Depreciation policy is on straight line basis. Zero Limited does not make a transfer to realize profits in respect of excess depreciation. So the question is talking about depreciation, right?
Yes.
So you go to working number 3. You go to working number 3. Leave ample space for the cost of sales, like I've told you. Then go to working number 3. And then write depreciation of the assets. So depreciation of assets. Take your time and take it one after the other. So depreciation. If you look at the first one, they say all plants, including that of joint operation in note 5. That means there is a joint operation in note 5. Now, what do we understand by joint operation? What do we understand by joint operation? Joint operation simply means you and I, we come together, you bring some resources, I also bring some resources, then we go and transact some separate business somewhere. Whatever returns we'll get from the business, then we share. You take your share, I take my share. Is that clear?
Yes, sir.
Yes, sir.
So your original business is there, but you've teamed up with the person. For example, let's say I'm into manufacturing of plastics. You are also into manufacturing of plastics, special top company A and company B. Then I see some plastics at a certain beach, a whole lot of plastics at the beach, and I feel I can't do it alone. I can call you and tell you, oh, since you are also into plastics, Charlie, let us team up and go and harvest these plastics and get returns from it. So we team up. Sometimes you can bring maybe 2 workers from your place. I also bring 2 workers from my place. I bring a little capital, you bring a little capital. Then we go and execute that operation. Then whatever we get out of it, everybody takes his share. So that benefit you get from there, you will go and add it to the benefit from your own company. Are you getting the point?
Yes.
Are you getting the understanding?
Yes. Yes,
So
sir.
it means that there was a certain joint operation in Note 5. Let's go down to Note 5 if we can see that joint operation. Note 5. It says on 1st January 2015, Zillow Limited entered into a joint arrangement with 2 other entities. Each venturer contributes their own assets and is responsible for their own expenses, including depreciation on assets of the joint arrangement. Zillow Limited is entitled to 40% of the joint venture's total turnover. The joint arrangement is not a separate entity and is regarded as a joint operation. Details of Zillow Limited's joint venture transactions are as follows. Plant and equipment, 12,000. Share of joint venture turnover, 40%. Related joint venture cost of sales, excluding depreciation, 5,000. Trade receivables, this. So it means that there was a joint venture plant of 12,000. Therefore, if we go back to our note 2, and then we are depreciating. Depreciation of assets. The first one is what? Plant, right? So,
Yes.
so go to the statement, the trial balance, and check if they've given me anything. What's the cost they give on plant and equipment? What's the cost they give on plant and equipment?
36,000.
This is
So plant and equipment, the depreciation is what? The cost is what?
36.
36,000. So that's how we should do it on reducing balance basis, right? So
Yes.
36,000 minus what's the accumulated depreciation
16,800.
in the trial balance? What's the accumulated depreciation?
6,800.
16,800. So minus 16,800, and they say we should depreciate it at what percentage reducing balance?
12.5.
The question says reducing balance what percentage?
12.5.
12.5.
So times 12.5. So times 12.5%. So calculate that for us.
2,400.
Then
2,400.
the joint venture plans. Let's do them separately. So joint venture plan 2. Remember the joint venture plan was 12,000. So 12,000. There was no accumulated depreciation. So that one to 12.5%. You said this one gave you what?
2,400.
So this is 2,400. What about that of the joint venture?
1,500.
1,500. So 1,500. Then we go ahead. Land and building. The building aspect also depreciates. So the building, the question said the land and building were revalued at 15 million and 48 million respectively on 1st January 2015, the beginning of the current year, creating a revaluation surplus of 21 million. At this date, the building had a remaining useful life of what? 15 years. So it means that the building, depreciation on straight line basis, yes, the land was 15 million, building was 48 million. So the charge for building will be 48,000 divided by the useful life of what? 15, right? So calculate that. What is that giving you? I'm getting 3,200. Am I right?
3,200.
That's it.
Okay.
Okay, so that is it. We are summing all the depreciation. You don't know whether there will be further assets, so you leave it there. So you leave it there. There's a depreciation on both building and plant should be charged to cost of sales. So when we calculate depreciation, will charge to cost of sales. That investment property. A qualified surveyor valued the investment property at 13.5 million. Zillow Limited uses fair value model in IAS 40. So, fair value model, the asset is not depreciated, right?
Yes.
Yes,
Mm.
sir.
So it means that we finish with the depreciation. And so let us
So
sign
please,
it.
the joint venture, is it
We've
not
added
entitled
it.
to 40%?
No. It says it's entitled to 40% of the turnover, the sales.
Okay.
So sum this depreciation for us. Sum the total depreciation for us. What is he giving you?
710.
1,100.
7,100, right? They say we should charge you to cost of sales. So you go back to your cost of sales and add the depreciation. So you go back to cost of sales and add depreciation like this. Then you go back to the cost of sales. Then you say depreciation, which you have calculated in working for 7,100. Then you add it 7,100. Are you getting the point?
Okay, sir.
So do that.
Yes.
Calculate all your depreciation. This is your depreciation. Calculate all. When you finish, go and charge it to. When you finish, go and charge it to the, what do you call it?
Cost of
Cost of
sales.
sales.
Okay.
Since this is your first example, take your time and write everything. Just take your time and work it out. Can we move on?
Yes, sir.
Yes, please.
Okay. Then the investment property. They said a surveyor measured it at what? Fair value. So we go to working for. So working for investment property. Now, investment property in IAS 40, the fair value model, what does it say? It says that we should restate the asset from cost to fair value. No depreciation should be recognized. Is that not it?
Yes.
Yes, sir.
So it means that go to the trial balance and give me the cost of the property as at the beginning of the year.
16,000.
2,000.
16,000.
Yes.
16,000.
Yes, sir.
So 16,000. But then what happened? The surveyor valued it at a fair value of what? 13,500, right?
Yes.
So this is a fair value loss, which we will charge to P&L, right?
Yes, sir.
That's 2,500. So fair value loss, 2,500. When we are preparing the P&L, we will charge that. Put it there. And let's move on to working 5. It says interest expense include overdraft charges, the full year's preference dividend, and an ordinary dividend of 4 pesos per share that was paid in June 2015. Now, I explained something on finance cost to you previous meeting. The interest expense, a company's finance cost, they said it includes overdraft charges. Now, interest on overdraft, does it qualify as finance cost?
Yes,
Interest
sir.
on overdraft, does it qualify as
Yes,
finance cost?
please.
Yes, sir.
Yes, it qualifies. So it means the interest is supposed to be there. Now they say a full year's preference dividend. Before a preference dividend will qualify as finance cost, then that preference shares must be redeemable. True or false?
True.
Yes, sir.
Remember in the previous meeting, I explained to you that there are
Yes.
two main
True.
types of preference shares. We have the redeemable and the irredeemable. Do you remember?
Yeah.
Yes.
The redeemable one means that the person has given you his capital. Work with the capital every year. When you make profit, pay the person a certain percentage. But after some number of years, the person can redeem the capital back. It means he can call back the capital. And so I explained that if somebody has given you money, you are working with the money, and every year you are paying the person some percentage. Then after some number of years, the person can come back for the capital. Is it not a loan?
Yes.
Is it not similar to a
So,
loan?
It is.
Yeah.
It
Yes,
means
sir.
that the economic substance is looking like a loan. So any interest on it, we'll treat it as finance cost. But the irredeemable one, it means the person cannot come back for the capital. So if somebody has given you his money and you are working with it, you are paying the person returns, but the person cannot come for the capital, then it's behaving like ordinary shares. True or false? True or false?
Yes.
Mm.
True.
So because it's behaving like ordinary shares, that one, the substance will be an ordinary share. Therefore, any dividend we pay on it, we'll classify it as real dividends in statement of changes in equity. But then for the preference dividend, you check. So go to the trial balance and check if the preference shares they've given us whether it is redeemable or not. Let's go to the trial
It's
balance. Let's check.
redeemable.
Yes, can you see the last but 3? The
Redeemable.
last but 3 item. This one. It says what?
Yeah.
10% redeemable preference shares. Can you see?
Yes,
yes.
sir.
So since the preference shares is redeemable, it means the interest on it qualifies as what? Finance cost. Then they are saying an ordinary dividend of 4 pesos per share that was paid in June 2015. Now, ordinary dividend, should it be classified as part of finance cost?
No.
No.
So it means we have to value the dividend and take it out, right?
Yes.
Yes.
So you
Yes.
first the ordinary dividend. You have to measure it and take it out. It's a wrong treatment. So the ordinary dividend, they say 4 pesos per share. So first of all, let's calculate the number of ordinary shares. Yes, read through the question. What is the number of ordinary shares given in the question?
Oh, I think it's 25 pesos per share.
The number of ordinary shares
20,000. 20,000.
from the question. How many
So
ordinary shares are there?
20,000.
20,000, but then it was at 25 pesos per share. So
Where are we seeing it? Where are we seeing the
Under the deferred tax.
under the deferred tax.
under the deferred ordinary shares of 25 pesos, it is what? 20,000. So the
Yes.
capital is 20,000. So this is what you do.
Yes.
This is
So
what you do.
yeah,
So since the
we divide
capital
it
is 20,000,
by
you will say
5.
the number of ordinary shares is the 20,000 cedis.
Yes.
You take the
Divided
20,000
by
cedis
0.5.
and then you divide it by 25 pesos per share, right?
Yes.
Yeah.
So how many shares is it giving you?
80,000.
80,000.
80,000.
Yes.
Sir.
This is 80,000 shares. So the company has 80,000 shares. Now, they said they pay dividend per share of how much?
4 pesos each.
So dividend per share, 4 pesos is so multiply it by the 4 pesos per share. So when you multiply 80,000 by 4 pesos per share, what do you get? What do you get?
3,000.
Eh?
3,200.
3,200. So this 3,200, it is not supposed to be part of the finance cost. So we'll go to the finance cost and go and take it out. So I can see it. I can just go to the finance cost, take it step by step, then we are going. So working 6. Now give me the finance cost in the question. The finance cost in the trial balance. Give
Interest
me the value of
expense
that.
was 5,000.
It was what? 5,000.
The interest
Yes,
Where
expense.
did you see that 5,000 from the question?
Interest,
Where did you
interest
see it?
expense.
Yes.
Interest
Where in
expense.
the trial balance?
Under the
In the
closing.
middle.
Yes.
Everybody look here. Interest expense, no 3. The interest
Yeah.
expense is what? 5,000.
5,000.
5,000.
5,000. But that 5,000, they say it includes overdraft charges, which is supposed to be there. So 5,000. The overdraft charges is supposed to be there. The full year preference dividend is supposed to be there, but the ordinary dividend is not supposed to be there. So we'll take it out. Is that clear?
Okay.
So ordinary dividend, which we've worked in working 5, that's 3,200. So you take it out. Then we continue. So please do that. I'm taking you gradually. So do that. Measure your ordinary dividend and take it out of the finance cost. Measure your ordinary dividend and take it out of the finance cost. Measure your ordinary dividend, take it out of the finance cost, and let's move on.
Okay. Done.
Are you okay?
Yes, sir.
Okay. So if there is nothing else, let's close finance cost to do as what?
1,800.
800.
Now the next footnote. The directors have estimated the provision of income tax for the year ended 31st December at 8 million. And this will address income tax standard. That standard is a very easy standard. I don't know. When students see it, they are not able to solve. Now, income tax, what you've been hearing, deferred tax, deferred tax, deferred tax. Deferred tax is not a tax. Are you getting the point? Hello?
Okay.
Deferred tax is not a tax. Are you getting it?
Yes, sir.
Yes, sir.
Deferred tax is only an accounting provision. Remember that accounting provisions in IAS 37, it says that anytime something happens today, and it is clear that that thing is likely to make you incur some cost in future, make a provision for that cost today. True or false?
True.
True.
Good. So when you hear deferred tax, what deferred tax simply means is that the business can engage in a transaction today, and because of that transaction they engage in, the transaction will bring a future tax consequence. Are you getting the point?
Yes.
So that future tax consequence, you create a provision for it today. For example, if you go and if you revalue an asset, if you revalue an asset upwards and you get a gain, that gain is not physical money. You know that.
Yeah.
Yes.
Yes.
That's why we recognize it in other comprehensive income. But in future, in the long-term future, if you sell that asset, the gain will turn to a profit. Is that not it?
Yeah.
Yeah.
It will now
Yes.
become a rare cash, so you pay tax on it. Are you getting the point? And
Yeah.
so, because it will bring a future
Yes.
tax consequence, accounting says we should make a provision for that tax today. So that deferred tax we see is just an accounting provision which they've made towards future taxes. Are you getting the point?
Okay.
Yes, sir.
So anytime you see
Yes.
income tax, this is what you do. Anytime you see income tax, you open 2 accounts. You just open 2 accounts. The 2 accounts are this. You open a deferred tax provision. Deferred tax provision. So the reason why you get confused with deferred taxes, you are not made aware there is a provision. It is a deferred tax provision, not a tax itself. Then you also open income tax expense. So the deferred tax provision is a separate account. Then you also open another account, 8, which you call that one income tax expense, the one you send to the P&L, income tax expense, which I'll send to P&L. The income tax you send to P&L should contain 3 items. The 3 items are the current year estimate. So let me put it down first before I solve so that you understand. The current year estimate, then any under or over provision. Under or over provision means that last year you pay some tax. Do you know that tax for this year is paid next year, right?
Yeah.
Yes.
Hello?
Yeah.
Income tax for
Yes.
this year,
Yes, sir.
you pay it next year because if you finish preparing your financial statement this year, and then let's say you make profit of 30,000, by January, February, March, thereabout, you pay tax on that 30,000. You assume that if I'm getting profit of 30,000, corporate tax is 25%. So 25% of 30,000 will give you about 7,500. You might have paid that money to the tax authority, GRA. But later, if you filed your financial statement with GRA, GRA will go through your financial statement and they will decide the correct amount of tax you are supposed to pay per the tax laws. Are you getting the point?
Yeah.
If you've learned some taxation, you realize that some incomes and expenses that accountants charge in the accounts, tax does not recognize it. A typical example is depreciation. So the taxman will take the profit you have declared in accounting, then he will add back what we call the this is the what do you call it now? Non-allowable deduction. He will add back the non-allowable deductions like depreciation and then for penalties and fines. He will add back all those things. Then he will get the true value for your profit and declare the true tax for you. So there is always a possibility that the true tax that they will declare for you may be different from what you actually paid. Is that clear? Is that clear?
Yes, sir.
Yes, sir.
Therefore, assuming you've paid 4,000 to the tax authority, but later when they calculated your actual tax, it was 5,500. It means you underprovided. You provided 4,000, which is less than the actual tax of 1,005. So you'll be owing 1,005. That 1,005, next year when you are paying tax, you are required to pay it. Are you getting the point?
Yes.
Are you getting the
Yes.
point? So
Yeah.
Yes, sir.
this under or over provision means that either an underpayment of tax or overpayment of tax as a result of last year. Are you getting the point?
Okay.
Then you have the third item, which we call the deferred tax movement. The movement in deferred tax, whether it is an increase or a decrease. So because I have not taught you the whole standard for now, just take this. Anytime you see income tax standard, create two accounts, deferred tax provision and income tax expense. In the income tax expense, the three values should be there. The current year estimate, under or over provision, and any deferred tax movement. So when you read the question, it tells you that the directors have estimated the provision for income tax for this current year at 8 million. It means the current year estimate was 8 million cedis. Can you see?
Yes.
So the
Yeah.
current year estimate. So the current year estimate here, you put down your 8 million, so 8,000. The deferred tax provision as at 31st December 2015 is to be adjusted through the profit or loss statement to reflect that the tax base of the company's net assets is 12 million. So go to the trial balance. Go to the trial balance. Whether they've given you something on income tax or deferred tax. If you see income tax, mention it. If you see deferred tax, to mention it.
You have
Do you see
deferred
income
tax.
tax or
You
deferred
said,
tax?
yeah, you see the
Deferred tax.
Tax.
Now, if you don't see income tax itself written in the statement, it means there is no under or over provision.
Oh,
If it
okay.
is an under provision means you are owing the taxman, so it will be an expense. They will put it in the debit side. And if it is an over provision, it means the taxman is rather owing you is an income, so they will put it on the credit side. Is that clear?
Yes, sir.
Yeah.
So anytime you see the word income tax in the trial balance, if it is on the debit side, it's an under provision. And if it's on the credit side, it's over provision. Is that clear?
Yes,
Okay,
please.
sir.
So now there is no under over provision, but there is an opening balance of deferred tax. They said the
Yes.
opening balance of deferred tax is what?
5,000.
5,200.
5,200. So you put the 5,200 here in the deferred tax account. Now, since it's a provision, how do you measure provisions? You compare the opening balance to the closing balance, right?
Yes.
Then any increase or decrease will go to P&L. So the closing balance of the provision, this is how we calculate it. You will take the temporary difference and multiply by the tax rate. So you see, if you look in the footnote, it told you that the deferred tax provision at 31st December 2015, that's the closing balance, is to be adjusted to reflect that the tax base on the company's assets is 12 million less than their carrying amount. So it means the difference between the carrying amount and the tax base is 12 million. Now, difference between carrying amount and tax base is what you call temporary difference. Is that clear?
Yes, sir.
So you multiply that temporary difference, 12,000. Oh, I don't know why my pen seems to be disappointing me so much. So you now multiply the 12,000 by the tax rate. And they said the tax rate is for 30%. So you multiply the 12,000 by 30%. Now I'll give you the closing balance of the deferred tax. And it gives you what? 3,000. So there is a provision of 5,200 at the beginning, and it reduced to 3,600. A reduction in provision is what? An income, right?
Yes.
Right?
Right.
So
Yeah.
an income. So let me not even call it income so that you don't become confused. I'll say it's a reduction. Let me just write reduction for the sake of those who are first timers. So I'll put here, this is a decrease in deferred tax. So the decrease, it will charge to P&L. So the decrease is giving you what? 1,006, right?
Yes.
Yeah.
So this 1,006 decrease, you said you should charge to P&L. This is the tax in the P&L. So you come and charge this deferred tax, 1,600 decrease. Then they close this to give you 6,400. So this 6,400 is what you send to the P&L. Are you getting it?
Yes.
As we solve more examples, you'll be very familiar with tax. Just have in mind that anytime you see taxation, you open how many accounts?
Two.
Two accounts, a deferred tax provision and an income tax expense. Then for the income tax expense, 3 items will go there, which is the current year estimate, under or over provision, deferred tax movement. Then in the deferred tax provision, you compare opening balance to closing balance. To get the closing balance, you will take the temporary difference, which is the difference between the carrying amount of the entity's net assets and the tax base. You take that difference and multiply it by the tax rate. That is what will give you the closing balance of the deferred tax. So when you compare it to the opening balance, whether it's an increase or decrease, then you go and charge it in the income tax expense. Is that clear?
Yes, sir.
Great. So deal with your tax. Deal with your tax. Yes. Can deal with your tax. Working 7 and 8. Deal with your
So
tax.
once there is income tax inside the
Income tax.
trial balance, that is when
When you
you
see income tax, if you see income tax itself written in the trial balance, if it is on the debit side, it means it's an under
standard.
provision. And if it's on the
Okay.
credit side, it means it's over provision.
And then,
So
okay. So please,
when we finish, I'll brief you on the income tax. So you write your
Okay.
working 7 and 8.
Okay.
So income tax alone, when you solve it, it will give you 6 ticks. It will give you 3 ticks in the deferred tax and another 3 ticks in income tax. It's very easy. But anytime the students see it, they just mess up. And you must know that there are some standards you can't do without it because the company will definitely have inventory. So the inventory standard, you will need it. Company will definitely have non-current assets. So PP, you will need it. Company will definitely pay tax. So tax standard, you will need it. The company will definitely have some loans. So financial instrument, you will need it. If you know these things, there is no way you fail the paper. You should know them. So as we saw, by the time we saw 4 or 5 examples, you will see that you are strong. Are you done with the working?
Yes, sir.
Are you done with the working?
Yes,
Definitely.
Mind
please.
me.
Yes, please.
So let's go up. Now let's go the next footnote. 5. On 1st January, Zero Limited entered into a joint arrangement with 2 other entities. So this is the joint venture. So the joint venture, anything you find in the joint venture, you will take what you got from your own business, then add that of the joint venture to it. And so, yes, and so I'll just go and say working 9. So working 9. Now in the joint venture, what are the things we see there? We see the plant. We've already taken the plant. It's a share of joint venture turnover, 40% of total turnover. So that is the 40%. So let's take turnover. Turnover is the sales. So go to the trial balance and give me the sales figure.
213,800.
What is the sales figure in the trial balance?
213,800.
So 213,800. Then you add the joint venture to it. So the joint venture sales is what? 8,000. Forget about the
Yes,
treatment.
please.
The treatment is how they recognize the joint venture in their books. But we are looking for the figure, exactly. So that will give you what? 221,000. 221,000, yes. 800, right? Then we have what? Joint venture cost of sales. So joint venture cost of sales, you go and add it to the cost of sales. Let's go up there. Our cost of sales account is there, remember. Yes. Cost of sales. So where is our cost of sales?
So it's at the top.
It's working.
Yes, these are cost of sales. These are cost of sales. Joint venture is how much? How much is the joint venture cost of sales?
5,000.
5,000. So you add it to it. Then trade receivables. So go and take the receivables. So please add the 3,000 to the cost of sales, the 5,000 to the cost of sales, and then let's move. Then you go and take the receivables. So let's go up there. Let's go and take our receivables. Yeah, so receivables. Go to the trial balance and give me the figure for receivables.
13,500.
So trade receivables. So our receivables opening balance is what? 13 what?
500.
13,500. Then that of the joint venture. How much is the joint venture?
1,500.
Joint venture is 1,500. When you add it to it, we get what? 15,000.
15,000.
Then the next one is what? Trade payables. So also open trade payables.
That'll be 14,000, not 15. Okay,
13,500 plus 1,005. Really?
Eh,
15.
yeah, Fabra no pay.
So trade payables. Yes, go to the trial balance. Give us the trade payables figure.
11,800.
So again and again, the opening balance 11,800.
800.
Then add the joint venture to it.
2,500.
2,500. What is it giving you? 14,300. Right?
Yes, sir.
So we are finished with the footnote. If there is nothing again, then you go and close all the other workings. So let me go to the top and close the other way. I'll let you take all the workings as a screenshot. So exercise patience. Let's go there. Yeah, so cost of sales. Since there is nothing again, you can close it. So please sum it for me. Sum the cost of sales for me. Calculate it. Please sum the cost of sales for me.
156,200.
156,200, right?
Yes,
Yes.
please.
Confirmed.
Okay. 156,200. This is my cost of sales. Okay, so let's move on. The depreciation, we've summed it already. Yes, the depreciation, we've summed depreciation already. Investment, but we summed all that. Let's close all our accounts. So I think we've closed all accounts, eh?
Yes, please.
So before we prepare the statement, now those who have been taking, please, have you written everything? Have you written all the workings?
Yes.
Yes, sir.
So those who have been taking the screenshots, you need to exercise patience. When we are done, then you take all the screenshots at once. So now let's go to our statements. Now let's go to our statements. Now let's go to our statements and then go and prepare it. Okay, so this is our first statement, the statement of profit or loss. So the statement of profit or loss, yes. What do we get as revenue in your workings? If you've written your workings, mention it for me, the working number and the value. What is the revenue?
The
Those who have
revenue,
taken the working,
it's workings 9.
so workings 9, and then the value is what?
221,800.
221,800 for revenue. Then cost of sales, We take out
Cost
cost
of
of sales.
sales.
Working number what?
156. Working
Working
number
three,
3.
156,
200.
200.
Yeah, we mixed up our working numbers.
Don't worry. So you see 156, 200. But why don't you follow what I'm doing than to mix it?
So I'm okay with it. I'm just trying to notify you.
I'm on the board. I'm on the board teaching you. So what I am doing is what you are supposed to do so that you don't get confused. Yes, the gross profit. So gross profit. Let's calculate the gross profit for us.
65,600.
Confirmed.
65.
600.
Now, check through the trial balance if there is any other income in the trial balance. Check it. If there is any income.
Rental income from investment property.
So that's an investment income, right?
Yes.
Yes.
So you add it to it. Okay, so gross profit. Now, the expenses, administrative and distributive expenses, check if they give them separately or they added them together as operating expense. They can either give it to you separately or they can give it to you as one figure as operating expense. So check.
Operating
expense.
was accumulated 2 years. Operating expense.
So operating expenses. That was how much? How
That
much is
was
operating?
22,400. 22,400.
So you didn't add the investment income.
No, add it. Operating expenses, when you take it out, then this will give you the operating profit, right?
Yes, please.
So this is what we call profit.
Before interest and tax.
Oh, why is my pen now misbehaving? Profit before
Interest and tax.
interest and tax. That gives you what?
43.
42.
42,300. Sorry, is it 224? No.
43, 200.
Oh, my brother, adding simple figures. You are an accountant too. If you do this, yeah, 40 what?
43, 200.
43, 200. So this is our profit before interest and tax. Now finance cost. Finance cost. We did it in working on our
Working number
cost
6.
was, and then the figure was what?
Number 6.
1,800.
1,800.
We take it out. Whilst we are taking it out, if there is investment income, like you said it was an investment income of what? In the trial balance, we mentioned some rental income, investment income. Yes.
Yeah, that was 1,200.
1,200. So that will be added. Then we had a fair value loss to P&L. Do you remember?
Yes.
In our working, we got some fair value loss on the investment property. Do you remember?
Yes.
That one is 2,500.
That's working number what?
4.
Working 4.
Yes, please.
So working 4. And that give us what?
2,500.
2,500.
2,500. So 2,500 is a loss. We have to take it out. So any other income or loss, you treat all of them here before you go to profit before tax. Is that clear?
Yes.
So net all off and let's see our profit before tax.
4,100. 4,100.
4,100. Then now the income tax, the expense. The income tax expense. That was working about 7, I guess.
Yes.
Or 8. Working about 8.
8. Number 8.
6,400.
6,400. So when we take 6,400 out, what do we get as the profit for the year?
33,700.
So profit for the year, 33,700.
700.
Now, when we did the building, when they revalued it, they said there was a gain, right?
Yes.
So other comprehensive income. Go to other comprehensive income. So other comprehensive income, yes. The revaluation gain. That was what? When you read the bill, they said creating a revaluation surplus of what? 21 million, right? Right?
Yes. Yes, please.
So that gives you what? 54,700, right? Right?
Right.
Yes. It was,
So this is the total.
yes.
This is the total comprehensive income. You are finished with this. Now, once you are finished with this, you move to the statement of changes in equity. Now, check through the trial balance. Give me all the equity figures there. Equity figures are share capital, retained earnings, revaluation reserves, general reserves. Check. Do we have share capital there?
Share capital, yes.
So share capital. Do we have retained earnings?
There we have.
Retained earnings. Do we have revaluation reserves?
Yes.
Revaluation reserve,
Yes.
yes.
Is there anything like general reserves or other reserves?
No, please.
So there are only three. Put them down. All of them will have their opening balances. All of them will have their opening balances. So you give me their opening balances. Share capital. What is the share capital?
20,000.
20,000.
Share capital is 20,000. What is the retained earnings figure?
17,500.
What is the revaluation surplus? At the beginning, there was nothing. The 21,000 is for the year. Do you remember? The 21,000, that is the revaluation for the year, which we captured in OCI. Is that clear?
Yes.
Yes.
So you will say for the year end. For the year, we got a profit for the year of what?
33,700.
Now, the profit for the year, 33 what?
33,700.
It will affect which account? Profit for the year will be
The
recognized
retained
in retained earnings. Is that clear?
yes.
So 33,700. Then there was a revaluation gain. Where will it go to?
The revaluation reserves.
Yeah.
Very good. Revaluation gain, 21,000 will now go to revaluation reserves like this. When you have done all this, and then you sum all. So when you sum all, this will give you the restated balance. So what is the restated balances? 20,000. What is the retained earnings giving you?
51,200.
51,200. And then the
21,000.
21,000 revaluation reserves. 21,000. When you finish, then you pay the dividends. The dividends, we worked it in working number something. Check on the top, our working numbers. Please check here, our working numbers. Here, we got the dividend here.
We've not worked on the dividend.
The
So
ordinary.
we took it, we calculated it as the working 5. We
What
calculated it
the
and took it
ordinary?
out. 3,200. Can you see?
Yes,
Yes.
sir.
Workings 5.
So 3,200. Working 5. The working 5. 3,200. They take it out of the retained earnings. 3,200. So at the end of the day, the closing balance is going to give you what? 20,000 for this. And this will give you what?
48,000.
48,000. And this is what?
21,000.
21,000. Are you getting it?
Yes, sir.
Then we go to the statement of financial position. So the statement of financial position, yes, under non-current assets. Non-current assets. Please, when you finish, I'll give you a chance to write. So exercise patience. Non-current assets. Yes, we had property, plant, and equipment. Make sure you write it in full. In exams or non-shorting anything, make sure you write it in full. So property, plant, and equipment, just like we have been doing the public sector. PP, you go and work it later. Exactly.
Yeah.
So just enter your property, plant, and equipment and leave it blank because we'll later go and work it. Property, plant, and equipment. So property, plant, and equipment. We'll do that as the last working. Leave it. Then there was an investment property. Now the investment property, you worked on it. When we worked on it, what was the final fair value? Check your working. Investment property.
13,500.
That's working number what?
Working on number 4.
So working for 13,500, right?
Yes.
So 13,500. So that is the non-current asset. There are only two. Then let's go to the current assets. Right. Inventory, the closing inventory, we worked it in working 2. What did it give us?
10,200.
Receivables, we worked it somewhere in working 10 thereabout. Check your working 10.
Yeah, 15,000.
Receivables was what? 15,000.
Yes.
15,500.
Now, the cash, anytime you need cash in bank, check the trial balance. The cash is an asset. It's supposed to be debit. Therefore, when it is on the credit, then it's an overdraft. This is one trick that ICA always use to get the students. So check, do we have physical cash or an overdraft?
Overdraft.
Can you see bank in the trial balance?
Yes, sir.
Yeah.
But that bank is on the credit side, right?
Yes, sir.
This is
Yes,
900. Overdraft.
Yeah, but it's on the credit side, so it's overdraft. So it doesn't affect our assets here. Is that clear? So I can close this.
And liabilities.
Then I go to what? Equity. Now, when you go to equity, you don't waste your time. The values you got in the statement of changes in equity, you just transfer them here. Share capital. If you watch our statement of changes in equity, share capital, we got 20,000. So share capital, we got share capital 20,000. Then we got retained earnings 48,000. Do you remember?
Yeah.
Do you remember we got retained earnings 48,000?
Yeah.
Then the revaluation reserves, we got 21,000.
Yes, please.
We got 21,000. Who did the 21,000? Then you come to the non-current liabilities. Non-current liabilities. Check through the question. Was there any loan? Was there any loan in the question?
No.
There was not. So the deferred tax you worked in working 7 is a non-current liability. What was the closing balance of the deferred tax?
3,600.
3,600. Then the redeemable preference shares from the trial balance. What was the redeemable preference shares? What was the redeemable preference shares?
10,000.
10,000.
10,000. That is it. Then we go to current liabilities.
Bank.
My page is not enough. So okay, don't worry. Current liabilities. Yeah, so the bank you have there is a bank overdraft, right?
Mm-hmm.
So put it there as bank overdraft.
Yeah, 900.
How much is the bank overdraft?
900.
Then payables. Payables, you did it in the last workings. Payables, how much is it giving you?
14,300.
11. 14,300.
14,300. Then the income tax. The income tax. So let me still put it here. You can see income tax. Now the income tax, the current year estimate. The current year estimate is what you put here. What was the current year estimate?
8,000.
The current year estimate, that's what you recognize as the liability. So that is it. Let's go and work the PPE and put it there. Let's go and work the PPE. Now, first of all, before I work the PPE, sum all the equity and liabilities for me. Sum the equity and liabilities for me and let me see. Please take your calculator and sum the equity and liability. I want to make sure when I find the PPE is balancing. Yes, the equity and liabilities. Kindly sum it for me. 20,000 plus 48,000 plus 21,000 plus 3,600 plus 10,000 plus 900 plus 14,300 plus 8,000. What are you getting?
125,800.
125,800. So there's 125,800. Let me put that here. 125,800. Please, I'm writing it here. Since I don't have space, I think you can see. I'm writing it here since I don't have space. 125,800. Now, let's go and subtract all the assets from it and see what the PPE will be, like we have been doing for public sector. Come here. Now, sum all these assets and let's see. Sum the assets there and let's see. Without the PPE, sum it and let's see. Sum it and let's see. 13,500 plus 10,200 plus 15,000. What does it give you? It's giving 38,700, right?
38,700.
When I take it out from the 125,800, my PPE should give me
87,100.
So now, let's assume our PPE was 87,100. I want to check from our workings. Let's check if we will get the 87,100. So let's go and do our PPE workings and see if we will get that 87,100. Let's go and do our PPE workings. Let's go and do our PPE workings. So let me call it here working number 12. Let me call it working 12. Property, plant, and equipment. Property, plant, and equipment. So look through the depreciation you work, the depreciation, and list all the assets for me, one after the other. The depreciation, what are the assets? Mention all of them.
Plant and equipment.
In your depreciation, the first asset was what? Plant and equipment.
Yes.
So plant and equipment, yes. What's the next asset?
Building.
So land, separate the land from the building, is that clear?
Yes.
Then what else do we have? That is all, right? So let's take the cost or the valuation. What was the cost of the plant in the trial balance?
So for the plant
36,000.
and equipment, 36,000.
36,000. What about the land? The land and buildings, they told us it was revalued at land. Look in the footnote. Look in the footnote. Land was 15 and revaluation was 48, right?
The valuation, yes.
Was 15,000. And then the building was revalued to 48,000. Exactly.
Yes.
Now accumulated depreciation. Yes, accumulated depreciation on the property, the plant and equipment was 16,800, right?
16,800, yes.
Then the depreciation for the year. Depreciation for the year. Plant and equipment. When we depreciated it, what did we get? Look in your depreciation. You worked the depreciation. So the depreciation for plant and equipment, what did you get? Before the joint venture, what did you get?
2,400.
2,000.
400.
So 2,400. Then the building gave you what? What did you get for building?
3,200.
3,200. Now there was a joint venture plant. The joint venture plant. What was the cost? 12,000, right?
Yes.
So the joint venture plant, the cost was 12,000. And then there was what? A depreciation on it.
1,500.
1,500. I don't want you to get confused, so I'm taking everything one after the other. 1,500. Is that not it?
Yes.
So sum all and let's see. Sum all and let's see. Sum all this and let's see. 36,000 minus
2,200.
the depreciation for a year is minus 16,800 minus 2,400 plus 4,000
2,200.
minus 1,005. 32.
100.
Why 3,200? Please be
For
careful.
plant and equipment.
36,000 minus 16,800 minus 2,400 plus 12,000 and then minus 1,500 is 27,300. Please calculate it well.
Okay, yeah.
Do you get 27,300?
Yes,
Did you
sir.
get 27,300?
27,300.
27,300. So plus 15,000 plus 51,200. I'm getting 93,500. What have I left out?
Yeah.
What have I left out? Please check our figures again. If we've left something out there. Plant
Please
and
say, I
equipment.
think the depreciation for the year for the building, you added to the cost instead of subtracting it.
Oh, okay. Yes, that's right. Here, please what here. The building, it was they revalued it at the beginning of the year. And then they revalued it to what 48,000, right? So it means that yes, at the beginning of the year, it was 48,000. But then the depreciation of the building. What was the depreciation of the building? What was the depreciation of the building? 3,200. Oh, I added it instead of subtracting.
Yes, you
that's
added
where
it
the
instead
error.
of subtracting it, yes.
So I think that's where the error is coming from. So when you sum this, what do you get? 48,000 minus 3,200.
Okay.
That will be 44 what? 800, eh? Right? Right? So
You get 87.
when you sum all, what do you get?
87,100.
Yeah, so we've gotten that 87,100 PPE. So that is it. On your own, when you have time, you can put these totals there. If you get time, you can put these totals there. So our work has balanced. Can you all see? Can you all see? Hey, my people, a lot of people are online and they are not talking. I'll start mentioning the names. So.
You can see. Very clear.
AB, Angela, Nchua, Apiasa, Daniel Busumpa. Where are they? Let me hear their voices. Asiedu and the rest. Let me hear your voices. Asiedu, Jesse, Irene Kuga, Joanna Pelly, Julius Bliss.
Yo, I said this here.
Kojo said, Wakam Selas, Yao, and the rest. Let me hear your voice. Samuel Angmo, Samson Chire.
Yes, sir. We're here.
So if
Sure, we are here.
We're here going through.
Yes, we are.
So now,
Our babies
please,
are awake too.
let me go up so that you take it page by page. Let me go up so that you take it page by page from the beginning. So take it page by page from the beginning. I'm going to start from the beginning for you. Now I've explained. So I'm sure when you take it, you will now understand. Please, we started from here. So take this first, please. Those taking the screenshot, or if I write, so that we can solve the second question. Are we taking screenshot or we are writing?
I'm taking.
So please, if you are done taking it, you tell me so that I move to the next one.
Okay, the next one.
Next.
Are you taking this one?
Yes.
So take it from here too. Since you've taken this one, take it from here too. Are we taking that?
Yes, sir.
So can I move?
Yeah.
Now, those of you taking the screenshot, right after the lesson, put it on the page. It is very irresponsible if you are in class. We give you all the time to take your screenshots. And when you finish, you just can't share your screenshot on the page. Sometimes I see students, I tell myself, you are the cause of your own problems. You are writing a professional exams. ICA is doing everything possible to keep you in the system for long. And then by God's grace, you've gotten some tutorials helping you to understand the thing. You are all the same people, so you must have the same objective. Why don't you just share the thing on the page so that your friends will also get access to it? Then they'll be calling and nothing tickles you. I mean, what kind of people are we? After taking screenshots, does it take you a minute to transfer it onto the page? Come on, let's help one another. All right. So, have you taken this? Have you taken this?
Yes. Hey, today to
The statement of changes in equity, take it. Take the statement of changes in equity. Have you done that?
Yes.
Then the statement of financial position from here. Take it from here. Have you done that?
Yes.
Then I'll continue from the non-current liabilities. Take it from here. Have you done that?
Yes.
Now the workings from working one. Take this. Can we move?
Yes, please.
Can we move?
Yeah, move.
Take this. Can I
Move.
Yes.
take this? Can I move?
Next.
Take this. Can I go?
Yes.
Can I go?
Yes, please.
Oh,
No.
take this one. Are you done with this?
Yes.
Take this one. Can I move?
Next.
Take this one. Can I move?
Next.
Take this one.
Okay.
Are you okay?
Yes, please.
Okay.
All right. Now, is there any question in this solution? Anybody wants to ask a question? Ask it. Let me address it before we go to the November 2016. We are solving two questions. If there is any question on this, ask before I go to the November 2016.
Hello, sir.
Are we fine?
Hello.
Yes, I'm listening. Talk.
Please, can you kindly go through the income, the portion for the income again?
Which income? There are so lot. Be specific. Which
The
income?
one, the workings, the one we did at the workings, when we were talking about the
Mention the name of the particular item. Mention the which
income
workings.
tax expense.
Yes, income tax. So let me clarify this. Here, I'm saying that anytime there is a question on tax, are you listening to me? My people, is everybody listening?
Yeah.
Yes.
So let me use an empty board to explain that. Let me use an empty board to explain that. This is what I'm saying. Anytime you see a question on tax, the moment you read the footnote on tax, you open two accounts. The two accounts are this: deferred tax provision. You open a deferred tax provision account. Then you also open an income tax expense account. Income tax expense account. Now, this is what happens. The deferred tax provision, you solve that one first. The question will give you an opening balance. So let me say this is the opening balance. They will give it to you in the trial balance. This one will give it to you in the trial balance. Are you following? Put that down. When you put that down, then the question will tell you in the footnotes that the difference between the carrying amount of the entity's net assets and their tax base is so and so. That's what we call the temporary difference. So in the closing balance like this, a moment. Now, in the closing balance, you come here and say balance carry forward. To get this closing balance, you multiply the temporary difference, you multiply the temporary difference times the tax percentage. Is that clear?
Okay.
So when you multiply and you get this, let me call this FA. If you get this, then here, when you compare, there will be an increase or decrease. So let's assume the increase is XB, like this, and then the decrease is XC, like this. Are you following?
Yeah.
Then now you come to the income tax expense. So the income tax expense, that is current year estimate. They will tell you what the directors have estimated for the current year. So that current year estimate, you put it down. Let me call it XD. Then if there is under or over provision, you capture it. And I said under or over provision, you will see it in the trial balance. Under or over provision, you will see it in the trial balance. Now, in the trial balance, if it is under provision, it will be on the debit side. And if it's over provision, it will be on the credit side. Is that clear?
Yes, sir.
So if it is under, it means you have more tax, you add. And if it's over, it means you have less tax, so it will subtract. Are you getting it?
Yes, sir.
Are you getting it, madam? Hey, the one who asked the question is no more responding.
Please, I'm here.
Now you asked the question, so you must respond to me.
Please, I responded. That's that.
Then now,
Sorry.
you take the deferred tax movement. So the deferred tax movement is what you have gotten here, this increase or decrease. Can you see?
Yeah.
Yes, please.
So this increase or decrease is what you capture here, XB or XC. And then you close it. And then let me call this XE. So when you close it, if you are reporting in the statement, this is how you report it. If you are reporting the statement, this is how you report it. The income tax expense on P&L, let's say profit before tax. When you get the profit before tax to be this value, the income tax expense, the whole of this summation, XE, the whole of the XE, can you see the XE, the whole of the income tax expense? That is what you will deduct from here. Income tax expense. Income tax expense. This is what you will deduct from here. So that's the XE. You deduct the XE, get your profit. Are you okay?
Yes, sir.
Are we okay?
Yes, sir.
Then when you go to the statement of financial position, this is what you do. Under non-current liabilities, under the non-current liabilities, under non-current liabilities, under non-current liabilities, under non-current liabilities, you enter the deferred tax. You enter deferred tax. Now, the deferred tax is the closing balance of the deferred tax here. The closing balance here. When you open the deferred tax, please, the one whose background is noisy, if you are doing something, then mute yourself. Be disciplined. If you are in the house and you are doing something, then mute yourself. But you don't have to disturb the whole class. So the XA, can you see the XA? Can you all see the XA? The
Yes,
closing
please.
balance of the deferred tax. Good. So that closing balance of deferred tax, that's what you enter as non-current liability. This XA, the closing balance of the deferred tax, that's what you recognize as non-current liability. Then when you come to current liabilities, under current liabilities, you enter income tax. Now, the income tax you enter under current liability is the current year estimate. So what the directors estimated for the current year, that's what you recognize as a liability. So the current year estimate, and then you can see from our illustration here, if I come down, the current year estimate is what? XD. Can you see the XD here? Can you see it here?
Yes.
Yes.
So I'll put it there and come back to the main question. So that XD is what you recognize as a current liability. So now coming back to our main question. Go to the footnote that has the tax. Madam, read it for us. Note Ivy. Madam, read for us.
The directors have estimated the provision for income tax for the year ended.
So hold on there. The moment you read, the directors have estimated the provision for income tax. You know it is about income tax, right?
Yes, please.
So the moment it's about income tax, what did I ask you to do?
You said we open 2 accounts.
What are the 2 accounts?
The deferred tax provision account and the income tax expense.
So deferred
Tax.
my pen is misbehaving. Let me. A moment, please. My pen is misbehaving. I want to deal with it. Okay, so deferred
Tax provision account.
So my deferred tax provision. And then I'll come down and open my income tax expense. Taxation is always one way. It will give you a lot of tips. So hold it. Then you solve the deferred tax provision first. So you take the opening balance. Where do you see this opening balance? Where will you see it?
Please, to be in the trial balance.
So go to the trial balance. Look for that deferred tax balance for me. You yourself look through the trial balance and locate it for me. I believe the rest are listening. Are we listening?
Yes, we are following.
Yes,
I will
sir.
give you the opening balance. Madam, what are you seeing as the opening balance?
Please, 5,200.
So you put the 5,200 here. Then you come to closing balance. How do you get a closing balance?
You
take
multiply
the temporary difference by the tax rate. Is that right?
Yes, please.
So the temporary difference, you will see it in that particular footnote. Now you read the footnote and tell me what your temporary difference is. Read it. I'm listening.
Okay, the deferred tax provision at 31st December 2015 is to be adjusted to read a profit or loss statement to reflect that the tax base of the company's net asset is 12 million less than their carrying amount. So it will be the 12 million.
So the difference between the carrying amount and then the tax base is the 12 million, right?
Yes, please.
Right? So you enter that 12 million. You enter that 12 million as the temporary difference, 12 million. Then you multiply by the tax rate. What tax rate did they give you?
Please, 30%.
So 30%. So 12,000 times 30% will give you 3,600. So now when you compare, is that an increase or decrease? It's a decrease,
Please,
right?
yes, please.
So that decrease, you charge it to P&L. How much is the decrease? How much is the
Please,
decrease?
1,600.
1,600 decrease. So this P&L they are asking you to charge it to, that is the P&L. This is the P&L tax. Are you getting it?
Yes, please.
So here, what are the three items that are recognized under income tax expense? Tell me.
Please, it will be the current year estimate.
So the current year estimate, that's what the directors estimated. So look for it and give me that figure.
Okay.
In the footnote, when you were reading, the directors estimated something.
Yes.
So read and give us that figure.
8 million.
Very good. So that's 8 million. You put it here. When you put that 8 million here, then you tackle an under or over provision. And I told you that under or over provision, where do you find it?
In the trial
Where do you
balance.
find it? Good. In the trial balance, you should see the word income tax written. So let's go to our trial balance, madam. Can you see income tax in the trial balance? The word income tax. Do you see it there?
No, please.
So if there is no, it means there is nothing. But if there was, if it is on the debit side, what will you treat it as? If there was income tax and it was on the debit side, that would be what?
It will be an under.
That will be under provision. So what will you do? You add it to it. It means more tax. That means you are owing more tax. You are under provided. So you are owing more tax. You increase it. And if it is on the credit type side, it means you have an income. So what will you do to it? You subtract. Are you getting it?
Yes, please.
Good. So here there is no under or over provision. So if there is no under or over provision, then now the deferred tax movement you calculated. So the deferred my system is slowing down. So the deferred tax movement. Now, in the workings we have done right here, right now, right here.
Yes,
the deferred tax, the movement, was it an increase or a decrease?
Please, it was a decrease.
So a decrease of what? 1,600. Are you getting it?
Yes, please.
You decrease it, then it gives you 6,400. Is that right?
Yes, please.
So you will see that this 6,400, that's what we entered in our P&L. Let me show you. Let me go up and show you. In our P&L, when we got to income tax, let me take my time and show you. Now watch. Can you see the income tax expense, 6,400 here? Can you see it?
Yes, please.
So that's why we entered the 6,400 here. Are you fine?
Please, I am.
Then when we went to the statement of financial, so the statement of financial position, oh, I don't know why my system is slowing down like this. Under non-current liabilities, can you see the deferred tax here?
Yes, please.
So the deferred tax here is the closing balance of the deferred tax, 3,600. Then under current liabilities, can you also see income tax here? 8,000. Can you see it?
Yes, please.
So that 8,000, that's the current year estimate. Is that clear?
Yes, please.
So let's go back. You will see that in what we just did, the current year estimate was 8,000, and then the deferred tax, we've entered 3,200. So this is where it came from. You can see clearly that from what we did right now, you see the deferred tax, the closing balance here, the 3,600. That's what we put there as deferred tax in non-current liability. Then the income tax, the current year estimate of 8,000, that's what we put in the current liabilities. Are you okay?
Yes, please.
I think
Yes,
when we solve
please.
the second example, you'll be fine. Is everybody okay?
Sir,
Yes,
is it
sir.
always
Yeah.
the case that in the deferred tax provision, the difference between the balance brought forward and the balance
Please,
carried
I
forward?
can't hear you. Irene Cougar, get close to the computer and speak well. I'm not hearing you clearly.
I'm asking if it's always the case that with the deferred tax provisions, the difference between the balance brought forward and the balance carried forward would
Yes,
always
the
be.
difference between the difference between the opening balance and the closing balance. When there is a revaluation which attracts deferred tax, you will be told. We will get there. The only thing left for you in deferred tax is when there is a revaluation which attracts deferred tax. When we get there, I'll show you how to treat that one. But in most of the questions, in 90% of the questions you will be given, the deferred tax will not attract a revaluation. So you are most likely to see this. For the purpose of your exams, always focus on this. You are most likely to see this. Is that clear? Are you okay?
Yes.
Okay. So let's take 5 minutes now. It's 5:38 now. Let's take 5 minutes. We'll come back at
Sir,
5. Yes.
please, so in the statement of profit or loss,
Yes.
before profit and tax, profit before tax, can you choose to apply 25%, depending on the industry, as the income tax for the year?
That is not what you do. That is not what you do. Please, we are not doing tax here. Please listen to me. This is one of the problems students find with financial reporting. Accounting is different from taxation. Are you listening?
Yes, sir.
So the tax rules are different from accounting rules. And that is the reason why when you send your financial statement to the tax authority, they will now readjust it using their tax rules. The financial statement you have prepared it in accordance with generally accepted accounting principles. Now the taxman will readjust it using taxation rules. So please don't ever try that. That income tax value there, I have taught you how to get it. That is the current year estimate under or over provision and deferred tax. Are you getting the point?
Yes, sir.
That is only what you need to do. That 25% you're talking about is what you do in taxation. And that 25%, if they don't give you the current year estimate, that is where you calculate 25% and treat it as only the current year estimate. Like this, the 25% will be only the current year estimate. But other things will affect it, which are under and over provision and deferred tax. Before you get the amount you charge at the profit before tax. Are you getting the point?
Yes, sir. Yes, sir. Yes,
So if the question is silent on what the directors have estimated, it means they haven't given you the current year estimate. That is where you would take, if your profit before tax, let's assume your profit before tax is 500. When you take 25% of 500, it is 100. Is that clear? Are you listening?
Yes, sir.
That's 100. You only put that 100 here as current year estimate. But other things will affect it, being the under or over provision and the deferred tax. Before you get this value of 6,400, which you will come and deduct here as tax. Are you getting the point?
Yes, sir.
Good. So I
Thank
think your
you.
question has been answered, right?
Yes, I'm clear. Yes. Clear.
Please, let's take a quick break. I'm taking some drugs and then I'll get back. So we are coming back at 5:50 exactly. Let's take some 9 minutes. 5:50 exactly will come so that by 6:30 we can finish the second question. So please finish yourself with the second question, November 2016. At 5:50 exactly, I'll be back and then we continue. So I'm please, did you hear me right?
Yes, sir.
Yes. Yes, sir.
I'll be back at 5. Yeah, I'm back. Hello.
Hello.
Yeah, so please open your November 2016 questions. Open your November 2016 questions.
Add absolutely limited.
Let me download my own question. November 2016, eh?
Yes, sir. Question 3.
Please, can you see the question?
Yes.
Please, the one playing the music. At least, let's discipline ourselves. We are in class. Okay, so November 2016. Yes, let's go question 3. Question 3. The following is a trial balance of Kwadaso Limited, a trading company, as at 30th September 2015. Then, what did the question say? Yes. Required. You should prepare the following statements for publication in accordance with International Financial Reporting Standards. A statement of profit or loss and other comprehensive income, a statement of changes in equity, and a statement of financial position showing clearly all workings. No accounting policies is required. So let's begin from here. Yes, there again. Go to your first page. Title it Kwadaso Limited. Kwadaso Limited. Then statement of profit or loss. Statement of profit or loss. Statement of profit or loss and other let's see again. And other comprehensive income for the year ended. What is the year end? 30th September
2015.
2015.
2015. Is the statement in thousands?
Yes.
Yes,
Was in
please.
thousands. So the statement was in thousands. Thousands. Okay, so like I said, leave the full page for the P&L. Leave a full page for the P&L, and then let's come to the next page, entitled it Kwadaso Limited. Kwadaso Limited. Statement of changes in equity for the year ended 30th September 2015. Then the next 2 pages. So the next 2 pages, the statement of financial position. Yes, again, there again. Let's go. So, Kwadaso. I don't see why my system seems to be jamming and jamming today. I don't know why.
All right. Good.
Okay, so let me manage it to finish, then I check what exactly the problem is.
Well, anyway.
I don't know why when I'm writing, I find it difficult. I don't know whether the board is fault or I don't know. That's so limited. Then statement of financial position. Statement of financial position. As at 30th September 2015. I don't know what is happening to my board suddenly. Suddenly, my board is misbehaving. So let's manage it gradually till then. Let's manage gradually till we finish, and then I check what exactly it is. Okay, so 30th September 2015. So normally leave 2 pages for a statement of financial position. Normally leave 2 pages for it. Now let's begin our workings. Let's begin our workings. So somebody should kindly read the footnotes for us, one after the other. Take it one after the other. So the footnote, additional information. Who will volunteer and read? Take it slowly, one after the other. Yes.
Yes, sir. So additional foot information. Now, footnote 1 said on 31st March 2015.
Let your voice come out loudly.
Okay, is it loud enough?
Yes.
Okay. Now, on 31st March 2015, the company made a bonus issue from retained earnings of 1 new share for every 4 shares in issue at 10 cedi each. This transaction is yet to be recorded in the books.
Okay. Now, the financial statement is being prepared to 30th September 2015. So when did the year start? So when did the year start? The year might have
1st October.
started. Yes, the financial statement is being prepared up to when 30th September 2015. It means that the financial year would have started in 1st October 2014, right?
Yes, sir.
Good. So if they did a bonus issue in 31st March, the first question we need to ask ourselves is, before they did that bonus issue, how many shares did the company have? So go and look for the share capital of the company, the number of shares. Go and look for the share capital of the company. Let's go through the trial balance. Look for the share capital. They've told us 500 ordinary shares. So he has 500 ordinary shares, right?
Yes, sir.
So as at the beginning of the year, which is 1st October 2014, by then, he has what? 500 ordinary shares. Now, he made a bonus issue of what? What was the bonus issue?
1 new share for every 4 shares.
1 new share for what? Every 4 shares, right?
Yes.
So the bonus shares, what at all is happening to this man? But the bonus shares, how many shares are there? 500. So 1 for every 4 of the 500 shares. And that gives you how many shares?
125.
125 shares. When you add it to it, then the total number of shares now will be what?
625.
625, right? Right?
Yes, sir.
Yes,
Good.
please.
By the
But
rest.
then the bonus issue, they say it was done from what? From retained earnings, right?
Yes, please.
So it means that we'll go and take the 125, the capital. So the capital that should be taken out of retained earnings, we'll say the bonus share capital. It's not supposed to bring any capital, but they've told you clearly that it was done from retained earnings. So we have 125 shares. And they said were issued at what?
10
10
cities.
cities.
Yes.
So at 10 cities. So that will give you what? 1250, right?
Yes,
Right?
please.
So when we go to the
Yes.
statement of changes in equity, under retained earnings, we'll transfer 1250 from the retained earnings and then add it to share capital. Is that clear?
Yes, sir.
Good. Go on. Continue.
All right. Now, the company paid ordinary dividends of 2.2 Ghana cedi per share on 31st January 2015 and 2.6 cedis per share on 30th June 2015. Now, the dividend
So
payment are included.
they paid dividend 2 times. The first one was paid on 31st January. So now the bonus issue was done at when?
31st March.
31st March. 31st March when?
2015. Sorry.
31st March 2015. So if it was done on 31st March 2015, what does it mean? It means that earlier on, before they had done the bonus issue, there was before they had done they had paid the dividend, the bonus issue had not happened. Are you getting the point? So the first dividend was paid on only 500 shares. Will you agree with me? Will you agree with me?
Yes, 31st January. So
They did the bonus issue in what? October 2015. Meanwhile, the dividend that was paid was in January 2015, the first one. Meaning that the first dividend, at the time they paid it, the bonus issue had not been made. So they paid it on only 500 shares. Do you agree?
yes, sir.
Yes.
So we can say dividend paid. I don't see why I don't know why my board is misbehaving today. And see my board is misbehaving. Please, can I switch to Zoom whiteboard?
Yes.
After my Microsoft board is corrupt. So let me
Yes.
use the Zoom whiteboard. Let me use the Zoom whiteboard. Since you all have the question, let me use the Zoom whiteboard. Matthew Abukari, please put off your video. I'm trying to change what I have here. Please, a minute. I think my computer itself is slowing down. And then I don't know why it should be like that. Trying to see if I can change the whiteboard. Okay. My system itself has slowed down, so let me adjust it a bit and then I work on that. Please, a moment,
Yes, sir.
I'm just trying to adjust. I think my PC, I don't know whether there's a virus worrying me. Let me try and safeguard you, and then after the meeting, I see what to do. Okay, I've tried to adjust something. So let's see. I'll try to adjust something. So let's see how best you can. So let me begin the working again from working 1. So from working 1, we said the number of shares. So the number of shares. So the existing shares is what? 500, right?
Yes,
Yes,
as
please.
October 2014. Yes.
Okay, then the bonus shares. When was the bonus issue made?
31st March 2015.
March 2015.
31st March 2015. We said 1 for 4 of the 500 shares. Giving you what?
125.
So when you add it, you now have 625 shares, right?
Yes.
Number 2, the ordinary dividends paid.
2.2 per share.
So the one they paid at 31st January. So let me say the 31st January payment. January, they paid a dividend of 2.2 per share. So that is 2.2 per share. But that one was paid on how many shares? On 500 shares. Do you agree?
Yes, sir.
Calculate that for me. 2.2 by 500. Please, you are supposed to do the calculation though. 2.2 by
1,100.
So 1,100. Then they said they paid 2.6 or so on 30th June. So the 30th June payment, that one was 2.2. So that 2.0 was 6. So that one they paid it on how many shares?
625.
Please, do you agree that that one was paid on the 625 shares?
Yes, sir.
Yes, sir.
Because that one was after the bonus issue. So calculate that for us.
1,625.
625.
1,625. So what was the total dividend that was paid? 2,725. And the question is telling that this dividend they have done what? They have included it in administrative expenses. Is it correct? Is dividend an expense?
No.
Dividend is charged in statement of changes in equity.
No,
Now
no,
they have
no.
classified it in administrative expense. So we need to go and take it out. Is that clear?
Yes.
Please.
Sorry, administrative expense. So go to your trial balance. Give me the administrative expenses figure. Give me the balance on administrative expense.
5,600.
Please look at the trial balance. Can you all see administrative expense here?
Yes, 5,600.
Is it
It's
5,000 or 8,000?
540.
Please, the question paper you have, if you cannot see, draw the lines. That's what I've been telling you, print it out. If you are writing IC, you invest money. If you pick a wrong figure, the examiner will not care. 8540. So 8540. Now we have to take the dividends out. So dividends wrongly charged. Let me call it dividend that has been wrongly charged, which we've calculated in working 2,725. We'll take it out. But you know, administrative expenses and cost of sales, more issues can come. So we leave enough space for it. Then we continue. Go ahead with the footnotes. Go ahead.
All right. So footnote 2. It said provision is to be made for a full year's interest on loan notes.
Provision is to be made for a full year interest on loan notes. So interest on loan notes. So look through your trial balance and then see the loan notes. the loan note, what was the condition attached to it? 8% loan. Can you see 8% loan here?
Yes, sir.
And that's what 2,500. Can you see?
Yes.
Yes.
So if you are providing for a full year interest, 8% of 2,500. How much is that?
200 cedis.
200.
So 8% of that is 200 cedis. Then now, once they are telling you should provide for a full year interest, it means it's possible they paid some of the interest. So look through the trial balance. If they paid some of the interest, can you see loan note interest paid here? Can you see? Can you
Yes.
see?
Yes,
110.
yes.
Loan
Yes.
note interest paid 110. It means they paid 110. Out of the total 200, they paid 110. So the rest will be an accrual. Is that clear?
Yeah. Indeed.
A payable. Are you okay? So that will be a payable of what? 90. Are you getting it?
90.
That's an interest payable. Is that clear?
Yes.
Please, do we understand?
Mm-hmm.
Yes.
Hello, I'm not hearing the rest of the voices. There are 40 people online.
Total.
I'll start mentioning names. So
8%.
Sir,
Yes, yeah.
the style of my teaching is that when you are quiet for a long time, I'll let everybody know you are not following. But I'll mention the name.
Active.
Okay, so that is that.
sir, please, the 8% loan note.
Yeah.
Is
The
it
8%
20
loan
plus
note.
2016?
What? That's what I'm saying. That's the period within which they have to pay the loan. But we are looking for the capital. Are you getting it?
Yes.
The 2012 to 2016 means the period within which they have to pay the loan. But we are looking for the capital. Are you okay?
Yes,
Yeah.
sir.
Good.
Sir,
So let's go on. Continue reading.
sir,
Yes.
please, I thought when they attach a percentage to a loan note, it defines the kind of loan, or
No,
you
no, no,
have
no,
to.
no.
Okay.
The percentage is the percentage interest you are supposed to be paying.
Okay.
Yeah. So continue reading the footnotes.
All right, note 3. And the finance charge relating to the preference shares is equal to the dividend payable.
They said the finance charge relating to the preference shares is equal to the dividend payable. Now, which of the preference shares has its dividend payable as a finance charge? Which type of preference shares do we classify the dividend as a finance cost?
The redeemable.
Redeemable.
The redeemable.
Shares.
So it means that what you have there is a redeemable preference shares, right? So now you calculate the finance cost. So finance cost. So go through the question. Any interest we see is a finance cost. We'll add it. Let's take it one after the other. Sales, inventory, cost of sales, selling and distribution, admin expense, loan note interest. So there was a loan interest, right? So the loan interest is the first one. Loan note interest. The total interest for the year was what? 200, right?
Yes.
200. Then we have bank interest. There's another bank interest. Probably it will be an interest on overdraft or something. Bank interest, how much is it?
85.
85.
It's 85.
Let's continue going. Is there any other interest? No. Yeah. Then we have, yes, 10% preference shares. Now they've told us it is redeemable. So you know redeemable preference shares, the interest on it is finance cost. Is that right?
Yes.
Right.
So you say redeemable preference dividend. And it's what? 10% of what? 3,000, right?
Yes.
So 10%, the capital is 3,000, the interest is 10%, giving us what?
10%.
300, right?
3%.
Right?
Yes.
Yes.
Yes, 300.
So those are it. So that's all the interest we have charged. We're finished. Go to the next footnote.
All right.
So
Note
we
4.
charged all the interest. Yes.
The depreciation of property, plant, and equipment is to be provided on the following basis.
So let's scroll up and calculate our depreciation. So do you see that every day you are seeing issues related to finance charge dividend depreciation. Can you see? Can you see?
Yes.
We've solved 2 questions. So we've solved 2 questions. So as and when we are solving, as a student, you must be tactical and be observing. Do you see that every day there is an issue about finance cost, meaning you have to know the components of finance cost. Then you have to know that dividend is not an expense. So if it is charged as an expense, you have to take it out. Look, in the first year, they charge the dividend as part of finance cost, which we took out. Is that right? Now the second year, they have now charged it as an administrative expense, which is also wrong. It tells you that the examiner's interest is always on the treatment of what you call dividend. Are you listening carefully?
Yes.
So you could see finance cost, dividend issues, now to depreciation. So depreciation, which working number is this? Please be keeping it on 4. We are going to working 5. So depreciation in working 5. Yes. So working 5. Depreciation on assets.
Working 6.
Yes, please read it for me.
So plant and equipment is 10% on cost.
So plant and equipment, 10% on cost. So go to your trial balance and give me the plant and equipment cost. Plant and equipment. That is it. Plant and equipment
13,750.
cost and accumulated depreciation. The cost is the debit one, which is 13,750. The accumulated depreciation is the credit one. I think you all know this.
Yeah.
So 13,750, yes. 10% of 13,750. What is it giving you? 1,375. Then the next one, it says what? Computer equipment, 25% on cost, right?
Yes.
So computer equipment, that one to give me the cost.
7,200.
What's the cost?
7,200.
7,200. So calculate 25% of that for me.
1,800.
1,800. The next one is what? Motor vehicles.
Yes.
Motor vehicles is what?
1,500.
25%, 20% reducing balance. So 20% times reducing balance means the cost minus the accumulated depreciation.
Yes.
So let's look through motor vehicle. What's the cost?
The cost is 1,500.
Accumulated depreciation is 400. Can you see?
Yes.
Yes, sir.
Yes.
So 1,500 minus 400. Are you okay?
400. Yeah.
What would that give you?
1,100.
Times 20% will give you what? 220, eh?
Yes.
Are you okay?
Yes. 20, yeah.
Building has not come yet. Let's go. No depreciation has been charged on any non-current asset for the year. Continue with.
So Kwadaso revalues its buildings at the end of each accounting year. At 30th September 2015, the relevant value to be incorporated into the financial statement is 14,100 of 14.1 million. Yes. The building's remaining life at the beginning of the current year, that's 1st October 2014, was 25 years.
So at the beginning of the current year, the building has 25 years.
Kwadaso does not make an annual transfer from the revaluation reserve to retain earnings in respect of the realization on the revaluation surplus. Ignore deferred tax on revaluation surplus.
You see, now they are telling you ignore deferred tax on revaluation. At your level, they will always ignore. It's level 3 that they do those things. Okay, so let's see. So the building, there was a revaluation. So let's go and tackle the revaluation of the building. When we see the depreciation, then we come and put it back. So let's go to working 6 and do revaluation of the building separately. So let me go to working 6.
Say,
Yes.
because I think this is supposed to be question working 7.
That means with Mr. Workings, right?
Yes, please.
Yes. Should be 7.
So this one is supposed to be 5, right?
Yes, sir.
Yes.
So when you go to non-note interest, the working is supposed to be working 4, not working 3. At the finance cost. The finance cost, non-note interest.
Wait. Okay, I see. I see. So that's supposed to work in what, 4, eh?
Yes, sir.
So this should have been working 7, right?
Yes, please.
Yes.
So working 7, revaluation of building. They say revalues this building at the end of each year. As September 2015, the relevant value to be incorporated in the financial statement is 14,100. So let's go to the building from the question and see the cost of the building. Yes, leasehold building at valuation. As at 1st October 2014, 14,000. That means at the beginning of the year, they had already revalued the property to 14 million. Can you see?
Yes.
So we have the valuation at 1st October 2014. By then, it was 14,000. And the question said, by that time, the useful life of the building was 25 years. Look at this. Look at it. They said, yes, the building's remaining life at the beginning of the current year was 25 years. Can you see?
Yes, was 25
So it means
years.
that, so for that year, depreciation will be 14,000 divided by 25 years. What is it giving you?
560.
560. So when we take it out, what should have been the carrying amount at the end of the year? So the carrying amount at
13,440.
2015 should be 13,440. That is at the end of the year, it's supposed to be 13,440. But the question is telling us that at the end of the year, the value to be put in the financial statement is 14,100, meaning that they revalued it again at 30th September 2015. And they revalued it to 14,100. Can you see? Can you see?
Yes.
Yes.
So what is the revaluation gain over there? So what is the revaluation gain?
660.
Calculate.
660.
660.
Yes.
So 660. That is it. So this is that. So it means that there was a depreciation on the building 560. So we'll go back and put it in our depreciation. Are you following?
Yes.
Yes.
Depreciation on building. So depreciation on building, which we've worked in working 7, it was 560, right?
Yes.
That is it. Can we move on?
Yes, please.
Yes.
So we finished all the depreciation. You can add them. Then read the next note. Read the next note and let's go. When we finish, we'll sum all of them.
All
Read the
right.
next note.
Note 5. So the available for sale investment held at 30th September 2015 had a fair value of 8,400.
Now,
There were
financial instrument, available for sale instrument. He said available for sale instrument should be measured at fair value through OCI. Is that right?
Yes.
Yeah.
That is measured at fair value through OCI. So available for sale investment. You see that, so you see why you need to learn your standards very well. Because if you've learned the standard, you should understand that available for sale investment is measured at fair value through OCI. So what was the opening balance of the investment? Let's go to the trial balance. Let's go to the trial balance. That's investment, available for sale investment. Can you see it here? Can you see it here?
Yes, 8,700.
Yes, yes.
8,700. So it was 8,700. Now, the fair value at 30th September 2015, they said the fair value has become what?
8,400.
8,400. So if I compare this 87 to 8,400, clearly there has been what? A fair value loss, right? But this loss will be charged to OCI of how much? 300. Is that clear?
300. Yes.
Are you okay?
Yes.
Let me open it up a bit for the sake of
8
those who...
8 minus 7 minus 8 4.
Let me open it up a bit for the sake of those who did not. Let me open it up. Let me open it up a bit. Other than when you take the picture, it will look small. So let's see what we're talking about. So let's just present it well. So the fair value at 30th September 2015 give us 8,400. And so we realize that there is a fair value loss which we have to send to what? OCI, right? Of what? 300. Are you okay?
Yes.
Let's go ahead. The next footnote.
All right. Note 6 said in February 2015, Kwadaso Internal Audit Unit discovered a fraud committed by the company's credit manager, who did not return from a business trip. Now, the outcome of the fraud is 500 Ghana cedi of the company's trade receivables have been stolen by the credit manager and are not recoverable.
Hold on
Now,
there. Credit manager have stolen 500,000 of the company's receivables. He has collected the money and traveled abroad. So straight away, it will reduce our receivables, true or false?
True.
It's true.
Yes.
What working number is this?
Yeah,
What should this be? What working number should this be?
500,000.
9.
Working 9. So straight away, if you go to working 9, straight away, I should take my receivables. So go to the trial balance and give me the balance on receivables.
9,200.
Receivables is
9,200.
9,200. But then a fraud has been committed, fraud, which is 500. So it will immediately reduce our receivables, bringing it down to what? 8,700, right?
Yes.
Right?
Right.
Now the fraud, if you read further, it says that of this amount of 500,000 of the fraud, 200,000 relates to the year end 30th September 2014. That is previous year. Anything that relates to previous year in this year's financial statement becomes a prior year adjustment. Do you agree? Do you agree?
Yes.
Agreed.
Yes, sir.
Anything that has to do with previous year will become a prior year adjustment. In our statement of changes in equity, when we take retained earnings, we'll do a prior year adjustment first. What it means is that the fraud, they are telling you the fraud, out of the total fraud of 500, they said 200 relates to the previous year end. So we'll call it prior year. So the prior year will be a prior year adjustment. They said 200 was belonging to previous year. It means the one that relates to the current year is what? 300, right? They said, and the remainder to the current year. Can you see?
Yes.
So the current year one will be 300.
Yes.
And then the current year one will be an administrative expense. Do you understand?
Yes.
Fraud is an expense. So it will be an expense to administration. They must account for it. So the current year one, it will be an admin expense. So you send this current year one to admin expense. Are you okay?
Yes, sir.
Do we understand?
Yes, sir.
The fraud of 500 will first reduce our receivables. Then after that, they are telling us that out of the 500 itself, 200 belongs to last year. And so that will be a prior year adjustment. Then the rest of the 300, which is for this current year, that will be an administrative expense for the current year. Are you following everybody?
Yes,
Yeah,
sir.
yes.
Now listen to me. My character is that anything my spirit tells me that this diet is possible, they can examine this. When I'm teaching you, I'll stress more on that. I am not a diviner to know what is in the question paper. In fact, I don't know what is there. But what I can tell you is that if I am the one writing the paper for this diet, something like fraud, I will learn how to treat it very well. Should in case I see it in the footnotes, it shouldn't worry me. A word to a wise is enough. So I'll go to the administrative expenses. I'll go to the administrative expenses and go and put there the current year fraud. These are administrative expenses. So I'll put here the current year fraud. So current year fraud, which we saw in working 9, working 10, That was what 300, So it's an administrative, more expense. You add it to it. Go ahead, my brother.
All right. 7. And the corporate income tax payable estimated on the profit for the year is 3,500.
I told you that immediately you hear tax, what must you do?
You have to open two accounts.
What are the 2 accounts?
The deferred
tax expense.
So you see that it is not an intelligent student who passes exam, it's an obedient student. Somebody does not even understand income tax. But the lecturer has told him that immediately you hear income tax, open 2 accounts. He doesn't want trouble. He will just go there and open 2 accounts and say income tax expense.
Different provision income tax expense.
Please give me a moment and let me pick this call. A moment.
Yes, sir.
Hello? Hello? Yes, please. I'm lecturing. So give me some 30 minutes. I'll get back. Yes. So income tax expense, he has opened these 2 accounts. Now, when you open the 2 accounts, which one did I ask you to tackle first? The deferred tax provision, right?
Yes.
So even without reading the question, he knows what to do. That he needs his opening balance. So he will go to the trial balance. You find it in the trial balance, right?
Yes, 2,300.
Go and look for the deferred tax. What do you see here?
2,300.
2,300. You see, the woman who asked the question on deferred tax, you see now she's responding.
Very well.
I think I'm hearing somebody's voice. She's the one, our mother.
It's active now.
Oh, no,
Okay,
it's me.
Balance carry forward. So the temporary difference, where will you see it? In the footnote, let's go there. Corporate income tax payable estimated on profit is 3,500. An amount of 1,200 is to be transferred to the deferred tax account. It means they've given us the increase directly. Is that clear? They said we should transfer 1,002 to the deferred tax account. So instead of giving us the temporary difference so that we'll know the closing balance, they didn't. Rather, they have told us that even if you don't know the closing balance, they are saying that you should transfer 1,002 to the deferred tax account. It means the deferred tax, you should increase that account by what? 1,200. So can I get a closing balance now?
Deferred tax account.
So can I get a closing balance now?
3,500.
You see, now the question has even made it simple for you. So if you know this, then now when you come to your income tax expense, yes, what are the components of the income tax expense as I taught you?
Tax for the year.
Estimated tax. The current year estimated tax.
Current year estimate. Our mother, can you mention the value for us? Current year estimate from the question, what is it?
8,500.
Hey, madam, we want to hear your voice.
3,500.
500. Then we have to add what? An under or over provision, right?
Yes.
Under or over provision, where do you find it, madam?
It's in the
Where do you
trial
find under
balance.
or over? Trial balance. So let's go there. Check the trial balance whether you have some income tax there.
No.
Check your trial balance. Do you have income tax?
No.
So no, but don't say it will always not be there. Then now the deferred tax, we got an increase, right?
Yes, thousands.
Increase in working 11, which was what, 1,200. When we add it to it, it gives us what, 4,700.
700.
Is there anything difficult about income tax? Is there anything difficult about income tax?
For this question, no.
All the questions, they are easy. As we are going, look, listen carefully. As we are going, you will never see anything new. All of them, you will see that. Look, what you should know is that they will examine you standards itself in question 2. Now, this is what you should take note of. Your question 2 is going to be full standards. So that is where they will ask you major standards. Are you listening? But in the question 3, you are preparing financial statement. You only need petty standards to see if you understand. So they will give you only small standards in the question 3. They will not give you any, big standard in question 3 that you have to go through a whole lot. No, all the question 3 standards that will be put under the paper, the footnotes will be maximum 7. Maximum 7. Even out of that 7, you have something on inventory. You have something on depreciation. You have something on income tax. So 3 of them, you know it directly. And so if you have been given 7 footnotes, and about 3 of them, these dividend issues and administrative expenses, about 3 to 4 of them, you can tackle it so easily. Even if you can't do the rest, you can leave them and still write your statement and get some 10 over 20. Are you getting the point?
Yes, sir.
I have been given 7 footnotes. I'm writing exams. I don't need 100% to go. I need just 50%. And I have been given 7 footnotes. By God's grace, I can answer 4 of the footnotes. Don't you answer it and leave the rest of the 3 and go and post your statement and get half of the marks.
Okay.
They mark everything, every single working and every single tick, it will be marked. So you don't need, nobody is saying go and answer the question perfectly like I'm doing on the board. I am a teacher. And so because I am a lecturer, the kind of understanding you have, the question that I will use maybe 2 minutes to analyze, it will take you about 5 times my time. Are you aware?
It's true. Yes, it's true.
A question that I, a lecturer, would take 2 minutes to analyze. The time I would take to analyze, you will need about 5 times that time, comparing the difference in understanding. Therefore, if I use 2 minutes to answer analyze the question and see what they are talking about, you will need about 10 minutes. And that is why you don't need to waste time. The ones that you see that you are already familiar with, after all, solving these 2 examples, are you telling me when you see finance costs, you don't know how to handle it? Are you telling me when you see income tax, you can't handle, when you see depreciation, you can't handle it? You know how to handle it. So deal with those ones. Then the technical ones, if you can't solve it, you leave it and post the financial statement. That alone is enough to give you 10 marks. Are you getting the point?
Yes.
And the paper you are going to write, the question 2 and the question 3 are the most difficult. The question 2 being the original standards, and then the question 3 being the preparation of financial statement. Those are the most difficult areas. So if you can get 10 from there, if you can get 10 from preparation of financial statement, you can get 10 from standard, that is 20 marks. Imagine you get 15 from console, that is 35. Imagine you go and get 15 from interpretation. That is 15. You are not even going to ethics and the rest. Why will you fail the paper? So you see, failing the paper is a strategy. You can have a strategy to fail if you want to fail. Are you getting it? If you want to fail, then you can deduce a strategy of going to the exam hall and wasting your time solving every question. You want to solve everything, and then the time is against you. But if you are a smart student, you should see that my question 2 and my question 3, that is where I'm going to face difficulty. So when I go to the exams or those places, I won't waste so much time on it. Immediately they ask me to start with, first 20 minutes, quickly I'll tackle my ethics. After I've tackled my ethics and conceptual framework, those places, the 15 marks over there, you let me get just 8 marks. If I should get 8 marks from there, quickly, I'll jump 35 minutes, I'll go and do my console. Another 35 minutes, I'll go and do my interpretation. So 35 is 70 minutes plus the 20 minutes, 90. So within 1.5 hours, you've answered your ethics and conceptual framework theory, you've answered your console, you've answered your interpretation. Imagine you get 15 15 in console. Imagine you get even 10 in interpretation. That's 25. Then you get about 8 in ethics. That is about 33 marks. You are now going to standards. And then what do you call it? And preparation of financial statement. If you go to the preparation of financial statement and you get 10 marks from there, that is 47. Are you saying the standards out of the whole 20, you can get 3 over 20 and get your 50? Bah. So you see that the strategy, when I finish teaching you, I'll give you the strategies to go and approach the exam so that you don't go there and be chasing anything at all. So let us continue. When we finish, if I finish teaching you and you are going to write the exams, the last minute, I'll give you strategies to approach the paper. So that you don't go to the exam for any beautiful question you see, then you are chasing it. Other than that, you waste all your time. Yes. Also, we finish with the income tax.
Yes, sir.
Also, we finish the footnotes.
Yes.
Also, then if we finish the footnotes, we can prepare the statement. So let me prepare the statement here. What's the name of the company? Kwadaso, right?
Kwadaso.
So Kwadaso Limited. Statement of profit or loss and other comprehensive income for the year ended. When is the year end? When is the year end?
30th September 2015.
The statement was in thousands. Let me put it there. So now help me. Go to the trial balance. Give me your sales, the revenue. Give me the value of your revenue from the trial balance.
8865.
Please, when they mention the figure, check it for me, I beg you.
No problem.
Is it 8865? 8865 what?
Yes. 868.
Oh.
68865.
6885, like this.
68.
No. 68865.
68,865.
Who's that?
68,000.
Who?
800 and what?
865. 65.
Now, cost of sales.
Are you?
Did they give you the cost of sales figure?
Yes, sir.
Yes, please.
What is the cost of sales figure?
35,500.
35,500. Please net it off for me.
Three,
6.
A minute. Let me respond to this call. A minute. All right, let's go on. So when you net it off, what did you get as gross profit?
33,065.
My gross profit became 33 what?
365.
33,365. Okay, so now we had administrative expenses separately and distribution expenses separately. So let's go and finish our administrative expenses. Let's go and close them. Now the depreciation, since we've gotten cost of sales already, we have to charge the depreciation to admin expense. So you sum the depreciation for me. Please sum the depreciation for me. Sum them for me.
3955.
3955.
55.
3995. So I'll charge it to cost of
3955.
3955.
Yes, sir.
Three nine five five.
Yes, sir.
So 3955. So I'll put it in cost of admin expense. Where is my admin expense? Up there, right? So I'll put my depreciation here in admin expense. Depreciation. The depreciation is working on my what? The depreciation, it is working on my what?
Number 6.
Like, working number 6.
Yes.
So depreciation working 6. So please add the administrative expenses for me. Sum them for me.
10,070.
10,070.
Yeah.
Something like this. Right?
Yes.
Okay, so let me go back and then capture them there. So administrative expense. Administrative, it was working on my what? It was working on my what?
3.
Expenses working number 7.
So we got 10,070, right?
Yes.
Yes.
Distribution expenses is in the trial balance. Give it to me.
5,600.
Distribution expenses is in the trial balance. Give it to me.
5,600.
5,600. Okay. Then net them off. When you net them off, what do you get?
Operating.
Operating profit becomes how much? Please, operating profit is the same as profit before interest and tax. What do you get?
17,695.
17,695. Are you okay?
Yes, sir.
Yes, please.
Now, finance cost. I think we worked finance cost. Finance cost was working on what?
Working number 5.
Let me check. Working number 5. 585. Can you see?
Yes, 585.
585. So let's go. Finance cost. Working number 5. 585. Check through the trial balance. Is there any investment income there? Is there any investment income in the trial balance?
Yes, sir.
Yes, sir.
What was it?
360.
360. Right?
Yes.
When you sum all, you get profit before tax of what?
17,470.
17,470.
470.
Confirmed.
Then income tax. The income tax, we worked it as working number what? Yes, working number 12, 4,700. Can you see?
Yeah.
What do you get?
12,770.
12?
770.
12,770. Let's go to other comprehensive income. This time, the other comprehensive income are 2. Remember, we have a revaluation gain. So there was a revaluation gain on land, on the building, which we worked in working number. There's a revaluation gain. It was working number what?
7, working 7.
It was working number 7, 660. Can you see?
Yes, sir.
Yes, 660.
Then working 8, fair value loss to OCI 300. Can you see?
Yes. I will for some customers.
So working number 7, you got what? 360. 660, eh? So it's a gain. So 660. Then you had a fair value loss to OCI, right?
Yes.
300.
Fair value loss to OCI, which was working number what? 8, eh?
Yes, sir.
How
300.
much did get? 300.
Yes,
It's
sir.
a lot. So aggregate this and then sum them. Total comprehensive income gives us what?
13,130.
13,130.
Yes, sir.
Are we okay?
Yes.
Then I'll go to my
Yes.
statement of
Minimum
changes in
debt
equity.
616.
Quadaso Limited. Statement of changes in equity. Statement of changes in equity for the year ended. For the year ended 30th September 2015. So, can underline this carefully. Go through the trial balance. What are the equity items that are there? We have share capital, right?
Yes.
Yes.
So we have share capital,
Revaluation surplus, retained earning,
We have
retained earning,
revaluation,
original reserve,
general reserve,
retained earning. Then you have revaluation reserves, and you also have general reserves, right?
Yes.
General reserves. So this time, all the 4 components are there. All of them should have their opening balance. So all of them, give me their balances in the trial balance. All of them.
so share capital.
So share capital is 14,500.
Share capital was what?
14,500.
14,500.
Retained earning 3,600.
3,600.
3,600. Revaluation reserves.
800.
Revaluation reserves was what?
800.
800. And then general reserves.
1,500.
General reserves is 1,500. Okay. Now there was a prior year adjustment, the fraud. Do you remember?
Yeah, 300.
Do you remember in the fraud there was a prior year adjustment?
Yes,
Yes.
please.
Yes.
So prior year adjustment, that's working number what?
200.
Working number what? Let me go down there. Let's check it well. Let's be sure of what we are doing.
Working 10.
Working 10. The prior year adjustment was 200. Working 10, 200. So prior adjustment in working 10, that's 200. So we take it out of the retained earnings. Is that clear?
Yes, please.
When you do that, you must first restate your balance. When you do that, you must first restate your balance. What is happening?
Larry.
Is this someone doing that?
Somebody is writing on your board. Larry.
Oh, who is doing that? Larry. Who is the Larry?
Mr. Larry.
Let me check. Who is Larry? Larry, you are here. Larry, why are you doing that? Larry, if you have done that, then rectify it. Larry, I'm listening. I'm waiting for you.
Yeah, he's done that.
Okay. So, prior adjustment in working 10, 200. Now, when you take that 200 off, you have to restate your balance before you move on. Immediately you do that, readjustments before you move on. So restate your balance. You call it a restated balance. Restated balance. So 14,500. This one gives us what? 3,400.
800, 1,005.
1,005. All this will be giving you free ticks. Preparation of financial statements is an advantage. You get free ticks. Then now you come to, for the year, what you did. The current year, the issues that happened in the current year. First of all, there was an issue of shares. Do you remember? A bonus issue. Do you remember?
Yes, sir.
So bonus issue, which we work in working number what? The bonus issue was in working number what?
The working number one.
Working number one. And then we're transferring how much from retained earnings to share capital? 1,250. Do you remember?
1,250. Thanks.
We're transferring this 1,250 from retained earnings. Then we put it in share capital. Are you okay?
Yes.
Are you okay?
Yes, sir.
Then when you have done that, there was a profit for the year. So profit for the year, when we solved the P&L, what was the profit for the year we got?
12,770. 12,770.
So add that to retained earnings, 12,770. 12,770. Add it to retained earnings. Then the revaluation gain of 660. That will go to where? Revaluation reserves. Are you following?
Yes, sir.
Is everybody following?
Yes, sir.
Yes, we are.
Then the fair value
Yes,
loss
sir.
to OCI. So fair value loss to OCI. Now, as a smart student, all those other comprehensive income, they are reserves. The other comprehensive income are reserves. Here's the case, you put the revaluation reserve in revaluation account. So the fair value loss, which account will you put it in?
General.
Think twice. All the two of them, the revaluation reserves and then the fair value loss, all of them, we call them reserves. And so if they are reserves and the revaluation has gone to revaluation account, the fair value loss will also go to the other reserve, which is the general reserve. Is that clear?
Yeah.
So 300, you go and take it out of the general reserve. When you do this, then you restate your balance again. So restate your balance again, call it restated balance. Yes. So sum this for us. Share capital will give us what? What would the share capital give us? Larry, you are still doing this. Larry, why are you interfering? Yes. So share capital will give us what? Sum it for me.
15,750.
15,750. Retained earnings will give me what?
12,195.
12,195. Revaluation reserves will give me what?
1,460.
1,460.
General reserves will give me what?
1,200.
Once I've done this, I can now pay my dividends. And then the dividends, we worked it in working number what?
So the retained earnings.
Yes.
920.
14 what?
920.
That's not
Yes.
the retained earnings.
Yes, 14,920, sir.
So the person who mentioned the figure, where did you get that figure from? Please don't be mentioning figures from the from ICA workings for me. They can put their wrong figure. We need to solve it and get our own figure. Yes, give me the figure. What's the figure? 14 what?
920.
14 920. So it means that some have spied the answer ahead and they are just mentioning for me. Oh my gracious. When I'm teaching you, instead of understanding the thing and how it came about, you are rather mentioning the solution that they've done it
The
conscious that you don't understand already.
You don't know how to
The,
get the figures.
the thing that is conscious that you don't understand already, you are mentioning it for me again. When I'm teaching you what to do, oh.
Yeah.
So the dividend. Yes, dividends. What was the dividends? We did it in working number 2 also. Let's go and check.
The dividend paid.
Yeah, the one they put it in administrative expense and we took it out. That's it. The dividend on Icag 2725. It was in working 2725. Can you see?
Yes, sir.
Please, can you all see it here? 2725.
Yeah.
So let's go back and put it there. So dividend was in working what? 5, eh? It was in working number what?
Yes.
Working number what?
2.
So working number 2. And it was what? 2725. So when we take it out of the retained earnings, finally, our final balances will be what? 15,750 for share capital. What is the difference here?
12,195.
So the person who mentioned the 12,195, clearly you took the ICA figure. Don't do that. ICA, their solution, those who present it, they don't present it well. You don't understand. Follow the teacher and understand what
Yeah,
where the
you
figure
even get confused.
1460. And then what? 1,200, right? Do we understand it clearly?
Yes, sir.
Do we understand it clearly?
Yes, sir. Yes.
Let's go to the statement of financial position. So, Father So Limited. Father So Limited. Then statement of financial position. Statement of financial position. As at 30th September 2015. Statement was in thousands. Therefore, non-current assets. Non-current assets. Yes, PP. So property, plants, and equipment. Then we have available for sale investment. Is that clear? Available for sale investment, a long-term investment. So non-current asset. So please, the available for sale investment, it was working number what? We worked it and we got a figure. Can you give me that? Working number what?
8.
And then the final answer was what? 8,400, right?
100, yes.
Working number 8. And the figure was what? 8,400. 8,400. The figure was 8,400. Sorry. 8,400. Then we can come down and then go to our current assets. So let's go down a bit and come to our current assets. Current assets. Inventory. Receivables. I told you, ask for cash. Anytime you want to enter it, you check whether it's an overdraft. So give me inventory. From the statement, what is the value of the inventory?
35,500. 3,150.
So inventory is 3,150. Receivables, we went the receivables. Working number what? Yes, our receivable was working number what?
9.
Let's ensure. Let's check and ensure. Let's be sure. Working number 9, which gives us 8,700. Can you all see?
Yeah.
Can you all see?
Yes, please. You can see it.
Working 9, 8,700. So working 9, 8,700. Yes, 8,700. So we have 8,700. Now the cash there, check the travel balance. The cash, is it a physical cash or overdraft?
Yeah.
Check your cash or bank. Is it physical cash or overdraft?
Overdraft.
It's overdraft. It's at the
Overdraft.
credit side.
So if it's overdraft, it means we finished. Let me push this thing here a bit. It seems my board is overlapping. So let me push my board here a bit. Why my board?
I think the sign after T.
But because I have split it into 2, if I'm not careful, it will open up and cover the question.
Use the window key and then
that is what the
you split it using the
direction keys
window
on the
and
laptop. One is sport, so it's making it difficult. Okay, let's go. Let's go. So the total for the assets, if we don't know, so that's the total for the asset. We don't know it yet. Let's leave it. And let's go to equity. So under equity, your statement of changes in equity, the figures there, that is what you will just repeat. Share capital, retained earnings, so revaluation and general reserves, that's what they call the other components. So revaluation, reserves, then general reserves, So let's check and get the figures right. Yes. From our statement of changes in equity, let's go and check. Share capital was, please capture the figures for me. Share capital is 15,750. Everybody should capture one, so you mention it for me.
Yes, sir.
Share capital 15,750. Retained earnings 12,195, 1,460, and 1,200. Yes, so give me the figures. Share capital was what?
750.
15 what?
15,750.
750.
Retained earnings 12,195.
12,195.
Revaluation reserves
12,460.
1,460.
Yes.
And then general reserves
1,200.
1,200. So that is it. Then we move to non-current liabilities. Non-current liabilities. Check through the question. Was there any loan in the question?
8% loan note.
Excellent. So 8% loan note from your question. What was the capital? 8% loan note. What was it?
2,500.
So 8% loan note. She was what? 8,000?
2,500.
2,500. $2,500. Oh, my pen has started. Then apart from that, you have preference shares, right?
Yes.
It was a 10% redeemable preference shares.
Yes, sir.
What was the capital?
3,000.
It was redeemable. Redeemable. The capital was what? 3,000.
Yeah.
3,000. Then now, in your income tax, you have a deferred tax. Do you remember?
Yeah.
So capture your deferred tax. Deferred tax. Don't know why. I don't know. Just don't know what at all is mine. Let me manage it gradually and let's finish. When we finish, I'll go and work on it. Deferred tax. Yes, deferred tax was working number what?
11.
And then the closing balance was what?
3,500.
The closing deferred tax 3,500. So that is all for your non-current liabilities. Then we go to current liabilities. Current liabilities. Yes. In the question, we had a bank, which is a bank overdraft. So give me that bank overdraft figure. That bank you mentioned and you said it is an overdraft. Give me that
910.
figure.
910.
9 what?
910.
910.
910.
Then do you have trade payables there?
Yes.
Trade payables from the balance. Please check. Trade payables is 3,400. Can you see?
That's it.
Trade payables 3,400. Then the income tax, the current year estimate. Income tax, the current year estimate. Income tax, the current year estimate. What was the current year estimate? 3,500. Now, is there any payable, any other payable, like any accrual or anything in the question?
No.
Yes. In the question, do you have any payable or anything?
No, sir.
Yes, sir, we have. The interest on
No,
loan
sir.
note, there's an accrual of
We did accrue the footnotes.
The accrual in the footnote, right? So you can see that there was an accrual there. But apart from that, the redeemable preference shares. Read the note on the redeemable preference shares. They said it is equal to the interest payable. It means we've not paid it yet. Look at it. Footnote number, the finance charge relating to footnote number 3. Read footnote number 3.
The finance
Read
charge
footnote number
relating
3.
to the preference shares is equal to the dividend payable.
So there is a dividend payable there which we've not paid. Are you getting it?
Yes.
Can you see?
Yes, sir.
Can you see? So
Yes,
you can
sir.
call it other payables or accruals. You can either call it accruals or we can either call it accruals or we can call it other payables. Other payables. So let's go and do a working for that. Let me come down and then do a working for that. Let me call that. How many workings have we done so far?
12.
So this is 13, right?
Yes, sir.
So 13. Let me call this accruals. Accruals or other payables. As accruals or other payables. From the question, the loan note interest. The loan note interest payable. That was in working number 1. And it was 90. Do you agree?
Yes, sir.
Do you agree? Then the
Yeah.
redeemable preference dividend payable. Redeemable preference dividend payable. Now the preference dividend was 10% of 3,000. The capital was 3,000. Is 300, right?
Yes, sir.
Now the interest payable, it was working number what? Loan note interest payable was working number what? The loan note interest, where we saw that we got the accrual, that was working number what? Let me go up and let's check.
Number 4.
Number what?
Number 4.
Let's confirm here for the sake of those who didn't see it. Number 4, can you see the accrual here? Can you all see the accrual of 90 here?
Yes, sir.
Can everybody see the accrual of 90 here?
Yes, sir.
Good.
Yes,
So that
sir.
accrual of 90, we'll go there and capture it. We'll go there and capture it. So, yes. So that was working 4, right? Working 4. So when we sum all, what do we get? 390, yeah?
Yes, sir. 390.
So we'll come and put the 390 here as working number 12. Working number 12 or 13. 390. So having done that, we can close it. So please sum all the equity and liabilities for me. Sum all the equity and liabilities for me. Let me bring it down for you to sum it for me. Yeah, please sum it from the equity. Start adding it up for me. From the equity, start adding it up for me. Yes, from the equity. Start adding. Are you adding up?
Yes, sir.
15,750 plus 12,195 plus 1,460 plus 1,200 plus 2,500 plus 3,000 plus 3,500 We are getting to the end. My board is misbehaving. Let me just manage it, and I will take your screenshots, and then we go. Yes. Plus 910, plus 3, 400, plus 3, 500, plus 390. What are we getting? I'm getting 47,805. Did you get that?
Confirmed. Yes, sir.
47,805. You got that?
Yes, sir.
So if I go and put this as the total assets, if I put this as the total assets, 47 what? 805, eh? 47,805. Subtract it from it and let's know the PPE. Subtract it from it.
27,555.
1, 2,
27,555.
27,555. Do you see how I always use strategy to get my PPE? Because I don't want to waste time. So that in exams, so if time is against you, you can ignore it. So now let's go and work it. Now let us go and work it and then actually confirm if what you found is correct. Now let's go and work it and confirm if what we found there is actually correct. So let's now go and work our PPE. So let's work it as working 14, the very last working. Is everybody on board? We are finishing.
Yes,
I
sir.
hope everybody's on board. So 14, property, plant, and equipment. Property, plant, and equipment. Now, what were the PPE items? Look through your depreciation. Look in your depreciation. Mention all the PPE items for me. Look in your depreciation. What were the items? Mention them one after the other.
Plant and equipment.
We have plant and equipment. Plant and equipment. Plant and equipment. Then we have what? Computer. Computer. Then we have what? Motor vehicle.
Vehicles.
Motor vehicle. Then we have building, right?
Leasehold.
So all of them give me their cost. Plant and equipment. What's the cost? Let's go to the trial balance.
13,750.
Let's go to the trial balance. Yes, please. I need everybody's response here. PPE is a bit complex, so I need everybody's response.
Only one a bit painful.
13,750.
13,750.
Plant and equipment is what? 13 what?
750.
13,750. What about computer? Computer.
7,200.
7,200.
7,200.
What about motor vehicle?
1,500.
1,500.
What about buildings? Leasehold
14,000.
building, 14,000. So these were the evaluations, right?
Yes.
And then
Yes.
there was accumulated depreciation. So accumulated depreciation. Leasehold building, there was no accumulated depreciation for building. Plant and equipment was what? 3,200, right?
Yes.
Computer was what?
2,000.
2,000. Motor vehicle was what? 400.
400.
Then now the depreciation for the year. Depreciation for the year. The one you work in, you're working.
Yeah.
Go to your workings and mention all for me one after the other. It was working on what?
Working on my 6.
Working on mention all one after the other. Plant and equipment give you what?
1,375.
1,375. What about computer?
1,800.
Computer is 1,800. 800. What about motor vehicle?
220.
220.
20.
What about building?
560.
560.
Fi-
At the end of the day, this was the carrying amount. Give me carrying amount of all. Give me carrying amount of all. Please sum them for me. Don't leave the work for one person. If his calculator gives him an error, it will affect it. Please sum all for us. Everybody work. Sum all for us. Yes, I'm waiting.
First one is 11,925.
11.
No, 9175.
So you see why you have to be involved in the work and not leave it to one person. This is the reason why I always tell you, get involved and don't leave it for one person, because he can make a mistake and then we'll all write it. You will go and be wondering where the figures come from.
1975.
Hey, this is 13,000. What are you mentioning?
So 9175.
Okay, 9175.
75.
What about this?
5,200.
3,400.
5,400.
3,400.
3,400. What about this?
880.
880. What about the building?
13,440.
13,440. 13,440. Then we revalued the building, right? I think we revalued the building and we got a revaluation gain of what? The building, they revalued it and we got a gain of what?
660.
We got a gain of 660 for the building. So should I put a 660 here? When I sum everything, final balances were what? 9175. This is 3,400. This is 880. What would this give us?
1,400.
14,100. So when you add all those values there, and let's see.
27,555.
The total is what?
27,555.
So has it balanced now?
Balancer.
So that's what we put in the PPE. So let me go up and then put down take your screenshots. Please don't rest on them. You see how they are. It will tell you that the topic you are afraid of. If you are very tactical, that is where you can even score more marks. Are you seeing it?
Yes, sir.
Yes, sir.
Have
Yes,
you realized
sir.
that if you are tactical, you can rather score plenty marks here?
Yes.
So don't be afraid of it. Practice it. The more you practice, the more you know. From the way it's going, we are solving two questions. It means you'll be able to solve about 6 to 8 questions. Then you'll be fine. So I beg you, help me to help you. Okay, so please take your workings. Take the screenshots. Page 1. Take page 1.
Please move.
Have you taken this page?
Yes,
Wait a
please.
minute.
Oh, my brother.
Okay.
Can I move?
Yes.
Yeah, we can move.
Take working 2 and 3. Take working 2 and 3. Can I move?
Yes.
Can I move?
Yes,
Yes.
please.
Yes.
No.
My brother. Can I go?
Yes.
Sir.
So hold on. Let me position it well. Hold on. So take working 4 and 5.
Okay.
Are you done?
Yes.
Yes. Next.
5 and 6.
Take working 6. Take working 6. Are you done?
Yes, sir.
Yes.
Can I move?
Move.
Move.
Please, just be smart with this your screenshots. Are you okay?
Yes, we
Yes.
are.
So let me go to working 7. Okay, so take 7 and 8.
7, 8.
Take 7 and 8. Are you okay?
Yes, sir.
Okay.
Can I move?
Yes, sir.
Yes.
Yes, sir.
Take 9 and 10. Take 9
9,
and
10,
10.
11.
Are you okay?
Yes.
Please hold on. Let me position when I'm well. Okay, so take 11 and 12. Take 11 and 12. Are you okay?
Okay, yeah.
Are you okay?
Yes, sir.
Yes, sir.
Can I move?
Yes, sir.
Yes,
Yes,
sir.
sir.
Then the statement of P&L. Take the P&L. Can I move?
Yes, sir.
Can I move?
Yes,
Yes, sir.
sir.
Yes, sir.
Take it up to this level. Take it up to this level. Are we okay? Are we okay?
Yes, we are.
Statement of changes in equity. Take it up to this level. Are you okay?
Yes, sir.
Yeah.
Can I move?
Yes, sir.
Yes, sir.
Yes.
Take the rest of the statement of changes in equity. Take the rest of the statement of changes in equity. Can I move?
Yes, sir.
Yes, sir.
Then the statement of financial position. Take this.
Mhm.
Are we okay?
Yes.
Can I move?
Yes,
Yes,
sir.
sir.
Take this. Are you okay?
Yes, sir.
Yes, sir.
Is everybody fine? Can I move on?
Please, we
Yes,
are
sir.
fine.
Then the current liabilities. Take this and then the working 13. Are we okay?
Yes.
Yes.
Then the last working PPE. So take your PPE. Are we fine?
Of course.
Are we fine?
Fine, fine.
Yes.
Okay, so in our next meeting on Monday is it Monday? Yeah, I think Monday, right?
Tomorrow.
Yes, a
Tomorrow.
Monday morning.
Hey, if it's tomorrow morning, you will not get time to revise this. So let me give tomorrow morning to the corporate reporting students so that you have time to revise. Is that clear?
Okay.
Yes. Okay. And
Yes, so I'll give tomorrow to the corporate reporting student. When you have again, I'll notify you so that you get time to revise this. Is that clear?
Yes,
Yes.
sir.
Other than that, you'll just be piling notes. So whenever I let you, your next meeting, we solved May 2016, November 2016. Now, May 2017 is a cash flow. We'll finish all the preparation before we come to cash flow. So we'll go to November 2017. Go and look for November 2017. These are the questions we'll be looking at. November 2017, May 2018. You can see, if you look at the trend, you realize that ICA is repeating the past questions from the previous 5 years, the previous levels. So May 2018.
Yes.
Have you
That's what I
realized?
believe. Yes, yeah, it's
Yes.
true. It's true.
They started going back to the last 2 levels. You see, the previous one was from 2019 to 24. They have gone back to the previous one, 2016 there. And that's why I'm solving all the past questions around that area with you. So that when you go and you see similar things like fraud, finance costs, dividend payout, you won't be surprised. Are you getting it?
Yes, sir.
So November 2017 and May 2018. In our next meeting, we will discuss them. Please look for these questions, and then on your own, if you have time, just start scanning through on your own. If you have time, just look through. Whatever you understand is for you. Where you don't understand, when I come and I solve the question, it will improve it for you. I believe we've had a good day.
Yes, sir. Thank you, sir. Thank you very much. God bless you. Thank you.
Hello, sir.
Yes, sir.
Hello,
Is it
sir.
okay? Yes. Yes.
Sir, please, can I get the link to your initial meetings of the consolidation and the rest? Your
It's
first
the-
meeting, the session 1 and session 2. We cannot find it on the YouTube, please.
It's on YouTube.
Oh, they are there.
The session 1 and session 2, I've been searching for it since.
So what do you want?
They are there.
Okay.
Somebody
Okay.
says they are there. Look for it. Work.
Session 1 and session 2. Okay.
Okay. So
Thank you, sir.
we have had a good day. Now, so far, how far? Let me have the feedback. Is your understanding of the processes improving?
This is my first meeting and
Gradually.
Yeah, sir.
I'm very much. I'm just
happy. This is my
The
first
approach-
meeting. It's very good.
The approach I'm using to teach you and the presentation. Are you okay with it?
Yes, sir.
Yes. Yes.
So then I believe we have had a good day. We'll meet again somewhere in the week. I'll notify you.
Okay.
Sir,
So then, yes.
sir, please
Yes.
the crew at the last word. I can't see it well. Something payable.
Redeemable preference dividend payable.
Redeemable preference.
There was a redeemable preference dividend.
Yeah, that one.
Yes,
10%.
Are you okay? Are you okay?
The last one, sometimes payable. Is it redeemable preference dividend
Yes,
payable?
I said redeemable preference dividend payable.
Yes, sir. Okay, thank you.
Are we fine?
Yes, sir.
All right. So
Thank you.
we've had a nice day. Let's call it a day. We'll go and prepare well and then trade. Please don't just be taking the solution and then believing it. Remember that this rush hour you are doing, it's a dawn. This rush hour you are doing, it is a dawn crash. So it's a serious sacrifice you are doing. So if you can sacrifice your sleep and wake up at 4 a.m. and after all that you don't go and revise, then what are you doing to yourself? If you know you will not revise it, then you better sleep and have a good sleep. But if you will sacrifice and wake up at 4 a.m. and learn, and then you won't find time to revise it for it to give you advantage, then you are causing severe harm to yourself. You understand what I'm saying?
Yes, sir.
Yes.
All right.
Yes.
So we'll meet again on that.
Please, those of you good folk, please share it on the platform for us, so that we can.
Those who have taken the screenshot in the last 5 minutes, let it be on the page.
Share
in the next 5
please.
minutes, let it be on the page. Hello.
Thank you.
Hello.
Hello.
Sir.
Please, those who have taken the screenshots in the next 5 minutes, I'm expecting it on the page.
It's not on
the
I'm going to click on you.